Good morning, good afternoon, good evening, whichever part of the world you're joining us from. Global Alliance of Angel Investor and Venture Capital Networks, Global Council for the Promotion of International Trade LLC, along with our impact investment partner, Tacit Growth Strategies LLC, proudly welcome you all who are joining us from different parts of the world to this prestigious event, Global Impact Investment Summit 2022. I'm Aparna Kumar, the Global Co-Chairperson of GCPIT and your host for the summit. We are celebrating this event for 3 days, and on behalf of GCPIT, I wish to express our sincere gratitude to all our chief guests, our 40+ speakers who are going to present their very powerful sessions focusing on impact investment. We are grateful to our impact investment partner, Tacit Growth Strategies LLC, for their unconditional support for this summit. We have people joining us on Zoom. We have people live who are watching us live on LinkedIn. We would like to extend a very warm welcome to our LinkedIn family as well. We also would like to welcome our viewers on Twitter, Facebook, and also our GCPIT Global YouTube channel. Global Council for the Promotion of International Trade, or GCPIT, is one of the fastest growing organizations based out of India, South Africa, UK, US, UAE, and Europe, with board and council member representation from all over the world. Founded by the visionary leader, Mr. Santosh Ganesh, in the year 2020, GCPIT has been growing at an exponential rate with support from leaders from across the globe. Many of you are joining us for the first time, so let me give you a short introduction of who we are. And those who know us know that this is not going to be an easy task. In fact, I don't know where to start and where to end, but I will try to do it in a short time. We started our global journey with our first virtual event, the Global Leadership Dialogue, when the whole world was slowly moving into lockdown, while we started connecting with leaders from across the globe. We started organizing premium online events, and as many of you may still remember, our next event was the Global Women's Business Summit 2020, and we are proud and happy that the leaders who joined us as speakers for that summit never left us. We went on to connect with more leaders through our premium online events like Global Tech Summit, Global Innovation Incubation and Entrepreneurship Summit, Womenomics Global Mission, Global Women in Trade Summit and Virtual Expo, Entrepreneurship Development Program, through which we trained 8,000+ college students virtually during lockdown, the Global Sustainable Development Summit 2021. We did this every weekend for 3 months, going through each SDG in detail, focusing on what businesses can do for advancing the Sustainable Development Goals. Last year, we also awarded leaders from all over the world who are doing a remarkable job in their leadership journey, business, and sustainability. Yeah. At GCPIT, we are constantly on the lookout for new and innovative ways to assist businesses in expanding their global reach. We now stand proud with the launch of the Great Leaders Council, the Global Founders Council, and the Global Alliances for the advancement of SDGs, 3 global magazines, the Sustainomics monthly newsletter, and Impactpreneurs web portal. Global Alliance of Angel Investor and Venture Capital Networks is one of the global alliances through which GCPIT is aiming to create an angel investor and venture capital ecosystem. This alliance will focus on increasing the demand and supply for angel and VC funding for impact investing, dedicated to increasing its scale and effectiveness around the world. We all know that impact investments are investments made with the intention to generate positive, measurable social and environmental impact alongside a financial return. The long-held belief that social and environmental issues should be addressed through charity donations and that the primary goal of market investments should be to maximize financial returns is being challenged by impact investing. By creating a more hospitable environment in which entrepreneurs and venture investors operate, the alliance will increase the demand for angel investors and venture capital. The Global Impact Investment Summit is a humble effort towards creating awareness on impact investing and also to encourage entrepreneurs to focus on the triple bottom line, the people, planet, and profit. We hope through this, we are able to do our part towards saving our planet while supporting entrepreneurs across the globe. And we don't stop here. We at GCPIT are now on a mission to impact 100 million entrepreneurs and leaders by 2030 through our Impact Mission 2030. We won't be able to achieve this without the support of global leaders like you. Let's all work together towards building a new world, a sustainable world for the future generations. And let us be the change we wish to see in this world, as Mahatma Gandhi said. Now it's time to listen to our chief guest. To open the Global Impact Investment Summit 2022, we have with us our chief guest for today, Dr. Somdatta Singh. Dr. Somdatta is the founder and CEO of Asidus Global. She is a serial entrepreneur, angel investor, best-selling author, and philanthropist. Aceres Global is a third venture, with her previous ventures having been successfully acquired. She was bestowed with the coveted Times 40 Under 40 owner in 2021 and in 2020 with the coveted Indian Achievers Award and featured among Fortune India's 50 most powerful businesswomen. She has helped the Government of India build the visionary Women Entrepreneurship Platform by Niti Aayog and has authored two bestsellers, Decoding Digital, Unlocking Digital Barriers, and Stories from New India, Policies, Hope and Change. Let me proudly invite the chief guest of day one of the Global Impact Investment Summit 2022, Dr. Somdada Singh, for her address. Over to you, Dr. Somdada.
Thank you so much, Aparna ji, Santosh ji, and the entire GCPIT family and community for giving me this opportunity. I think impact investment is the very focal and the most important area that needs addressing. Because in today's day and time, when there is so many different varied interests, different people from different background, what are the real motors of investment that creates real impact, not only from a sustainability, from a scalability, but also from an equity perspective? I start this address by first thanking GCPIT to have such a unanimous view on equity of men and women, because impact starts with that. And the reason I say this is because while globally we constitute almost 48% of the economy, we still are not leveraged to our maximum. And I say this coming from a country like India, which just ranked 136th on the World Economic Forum gender parity map amongst 146 nations. And how sad is that? It will take us 197 years to bridge this gap. Now, what it puts in front of us is few pertinent questions. Why is only less than 3% women that are getting funded globally in an ecosystem when impact is the key focus? Despite the fact that there are so many women leaders driving the big banks of the world, driving the global economies of the world, and driving even nations at the helm of nations, yet the focus on impact driven by women is so minimal. Today, I was receiving the Women Entrepreneur of the Year award by MeitY, which is the Ministry of Electronics and Technology for the Government of India, and again, IAF. And one of the things I talked about is that true impact can only be created through a sense of equity. We are not looking for equality. We're not looking for gender equality because that biologically is not possible. But how do you create sustainable impact? How do you create more inclusion of women in workforce, in more impact, in more leadership and impact-driven roles? Because unless that balance is created, no matter how many sustainable goals you talk about, no matter how many agendas of creating unanimity you talk about, this parity, this gap will always become the hindrance of impact. You can never let the two wheels of the cart operate separately because you require both to create life, to create future. The question of impact comes with how are you enabling nations that are in the developing stage come in the forefront? It is such a great example to see Scandinavian countries own the mantle and drive this change. They are amongst the top 10 to 15% when it comes to equity, when it comes to impact, when it comes to sustainability, when it comes to climate change. You cannot open a company there if you're not creating an impact. You cannot create a company if you don't have equity of women within these organizations, and you'll not get funded. So what's happening is that there are some parts of the country or the world that are leading by example, and there are some that are still so digressed in our thought process that we're unable to understand that the real value of impact comes with equity, comes with true empowerment and inclusion of women and men in equal modus operandi. The other thing which is super important and critical for us to understand, what is investment? Is investment just about seeking capital? It is not. Investment comes, the first level of impact investment is human resource inclusion, training, evaluation, growth are the main fundamentals. No company, no economy is built without the people. No matter how much of technology advancement we make, technology will just be an enabler. Technology cannot make intuitive, emotional-based decision-making, which is the paramount factor for the success of any engine, whether it's an economy or whether it's an organization or a company. these factors of where is the balance between IQ and EQ? Where are the questions when it comes to where and how these investments is going to create this balance of IQ and EQ? In the world where we are constantly running and challenging ourselves, that we got to be better than someone, in a world where unicorns, which are nothing but faff, they don't really exist in real world. It's all about valuation, is quickly falling like house of cards. The moment 2022's reality has hit the market, like they're calling it the funding winter, what it really means is now reality has hit us. Now we know that the truth of a company, an organization, or an economy is about value creation, is about true customers, is about impact, is about sustainability and about scalability. And that cannot happen only on books on valuation. It has to happen with real change. And who are driving this change? Women. Out of the 2% company that gets funded, 79% is profitable. What does it tell you? That unless you include this equity, unless you bring this impact, unless you drive this change, there is never, ever going to be true sustainable goals achievement ever, in no matter how many histories we try to create. We need to step back. We need to refocus. We need to understand what impact investing means. When an investor at any level, I'm an angel myself. I invest in a lot of companies as an angel. And one of my main focus is I look at the value that the company is creating, the long-term value, not the short-term ones. Today, everybody talks about AI and machine learning. Half the people, Aparna ji, Santosh ji, and eminent listeners today, I can guarantee don't even know the difference between the two. They don't even understand that ML is an attribute of AI, and AI really has a larger paramount impact. And it's not just about saying, I am an AI company, because artificial intelligence is a decision-making process using different algorithmic patterns. And that doesn't happen overnight. It's a long-term process. And there are enough debates about it. You can never replace human intelligence with artificial intelligence. So one of the things about impact is also understanding the fundamental value of human intelligence. Understanding that can only come from knowledge creation and an economy that is skill-based. And nobody in this world, if you find any institution today that teaches their undergrad students on e-commerce. Now there are hundreds of courses that talk about AI, ML, but all at a post-grad level, or all at an additional course. But that's not the core fundamental. People are still learning, especially in countries like India, Africa, or even other countries like Latin America, which needs to be the drivers of this impact change, are still learning and being imparted on education that are fundamentally rural. It doesn't even have any real life application. Today, when I talk to a genesis of students, I just landed in India last night, and I was talking to a bunch of people, and most of them still are predated. They don't even know what's happening in the forefront. So what are the paramount impacts of, what are the paramount fundamentals of impact? One, cross-collaboration. There needs to be cross-collaboration, knowledge exchange between economies, between countries. It needs an equity in the workforce of men and women. There needs to be more inclusiveness. This dynamic of 3 to 97 has to change. Unless we change this, we will never be able to create impact, no matter how many years of so-called drive force we try to put behind it. The other very important thing is, how can we empower our children at a young age to choose a field that they feel more convinced about than pushing them towards an education format that is really not going to build anything for them? They still will be in a rat race trying to prove themselves. If we are able to create these changes, if we are able to really bring value to these thought processes, then the SDG goals can be met. Because you can't today one fine day wake up and say, why are the heat waves killing the whole world, when you never even thought that if there was a certain amount of equity that was created way back, these kind of things wouldn't happen. Debates are healthy, but decisions is what drives change. So we need to make these changes. We need to bring more equity, bring more decisiveness, bring more unanimity, bring more cross-cultural, cross-knowledge growth. Only then true impact and true investment value can be created. No more pray and spray. No more valuation game. It's about value creation. And with that, I want to close my address today. I'm sure there are amazing, eminent people today who will share their learnings, but I'm deeply humbled and honored to be opening this day one with this address. And I'm Truly grateful to GCPIT, Aparna ji and Santosh ji for driving this change. Thank you.
Thank you so much, Dr. Somdata Singh, for that impactful address to open the summit. I'm sure your words have inspired our viewers, especially young entrepreneurs, to think about what are the things that really matter. Wish you all the best for your future endeavors as well.
Thank you so much. Thank you. I'm very humbled.
Thank you. Now it's time to listen to our powerful speakers. To begin with, we have with us Ms. Meera Shiva, CFA, who is a finance professional with experience in working with innovative solutions. She is the director of Shelter Venture Fund, Habitat for Humanity International, Terwilliger Center for Innovation in Shelter, India. Shelter Venture Fund is a global impact first investment vehicle focused on low-income housing innovations. Habitat for Humanity is a global nonprofit housing organization working in local communities across all 50 states in the US and in approximately 70 countries. Habitat's vision is of a world where everyone has a decent place to live. Thank you so much for joining us today. Ms. Meera Shiva, over to you for your session, The Role of Civil Society in Impact Investing. I think Ms. Meera Shiva, are you there? Can we move on to the next? Now, it's time to listen to our powerful speakers. To begin with, we have with us Ms. Meera Shiva, CFA, who is a finance professional with experience in working with innovative solutions. She is the director of Shelter Venture Fund, Habitat for Humanity International, Terwilliger Center for Innovation in Shelter, India. Shelter Venture Fund is a global impact first investment vehicle focused on low-income housing innovations. Habitat for Humanity is a global non-profit housing organization working in local communities across all 50 states in the US and in approximately 70 countries. Habitat's vision is of a world where everyone has a decent place to live. Thank you so much for joining us today, Ms. Meera Shiva. Over to you for your session, the role of civil society in impact investing.
Thank you so much for that wonderful introduction. I'll take a minute to share my screen. I hope it's visible.
Yes,
for everyone visible. At this point. Okay, you
can put in screen share, slide share mode.
Yeah. Give me 1 minute. Sorry, I was sort of planning for a little later start. Yeah, thank you, and I'm glad everyone is able to join today. I'm very happy to be speaking on this very interesting topic in this, which is usually not getting the attention it probably ought to. And I want to have sort of 3 takeaways from this session, which is short. This is an interesting topic, but at least I hope this gives some food for thought for everyone. So the first takeaway I want to say is, what is impact investments and why is it hard, right? I say that impact investments is not rocket science. It's just way more difficult. At least rocket science follows the rules of physics. It's universal. It's the same everywhere. It doesn't change over time. But impact investments are very regional. Sort of what works in Cambodia may not work in Thailand or Vietnam, though they are all neighboring countries. And what works pre-COVID may not work during or post-COVID because social science and working with people is way more difficult than rocket science. And impact investment sort of spans the spectrum between charities, which are only impact focused, and traditional investments, which are only financial results focused. And impact investment tries to get this double bottom line. And often you find that you have to pull people, from the charitable space, people doing some good work to be more sustainable and generate profits, to be impact investable. And likewise, people who are working on the traditional side, having like really good businesses, to also focus on creating some impact. So it's a bit of a difficult problem, because there are 2 goals that one needs to meet, and hence they ought to get the support from at least the left side, the civil societies, which I define loosely as, the non-profits and organizations that are like support groups, right, that may not be registered, but are like industry associations and others which work towards some goal. The second takeaway I want to have is, how can the civil society actually work on this to support the impact investments and make them be successful? Because anything succeeds when there is, more money and the best brains and other resources are provided to them. So one way is, and I want to use the analogy or the framework of housing, because Habitat comes from a housing background. The first step is, you just need to prepare the ground and build the foundation, which is the ecosystem of startups, the entrepreneur support systems, and others that are needed to get the idea that is just like, what if, and like, oh my God, this seems to be a problem. What about, to actually having something that gets working. So you need incubators, accelerators, and which, help gel the idea into something, and people may need to do some pilots, because everything may look good on paper or a PowerPoint, but so these are areas where someone who says, let us see what happens, without too uber focused on the results, is able to chip in. The second is building the walls, which is working with the investors by providing them the support, because they need to take an interest, and only when founders see that, yeah, there are some investors they could talk to, they would be a bit more motivated to pursue, because entrepreneurship is very hard, right? And social entrepreneurship is much harder. So they just want to see that positive feedback from the investors, and investors need support by way of low cost capital, and some risk mitigation through things like first loss default guarantees, right? That if I do lend, or if I make the investment, if there are issues, someone is there to cover us. Then they may say, okay, I'll take this chance, right? Which tries to get people a bit more to overcome these issues they may have. The third one, which is like the roof or the insurance or the shelter, is to invest in founders more directly, rather than through the investors and other vehicles that already exist. This gives the founders the comfort that they may or may not be able to get with the other investors, because they know your priority is impact first, right? Because you are a civil society organization, and you just need to provide patient and flexible capital. Each one is slightly different, because a flexible is, you just understand the need of the market, the founder, the stage they are in, and come up with instruments that work for them. And patient is just having made that investment, to not say, well, it's 18 months, right? Where's my return? Or it's 3 years, I just need to get an exit. And others are like, some businesses just do not have the unit economics, and no amount of patience or flexible capital is going to solve some very fundamental problems. So you just need to provide some viability gap funding sort of grants to help this go off, so that the other investors are able to get that return. So these are ways to invest in founders. The fourth is, you need to handhold the change, so that it's all painted and looks good, and like is finished, by working around all of this through research and advocacy. Because who's going to invest in finding out what are the issues in operationalizing these things? Who's going to advocate these ideas, besides someone who's from the civil society? Everyone needs to do their bit in terms of research. I mean, the organizations will do their part, the social enterprises, but a more broader industry-wide research is also needed. And the other bit is creating awareness around the issue, so that the founders are not trying to make people aware that, oh, there are, the magnitude of the housing problem is so large, or the magnitude of the water or the sanitation issue is this much. This is just work that generally does good for the whole ecosystem. And the key is obviously building trust, because in the end, let's take a step back and ask ourselves, why are we doing what we are doing, right? Why are we doing impact investment? Why are we the civil society that's, doing all this work? It is so the people who need the service, the product, the new business model, right? The money or whatever it is that they are looking for, the quality, the choices, various things that people do look for that they do not have access to. They trust what is offered to them is good for them. It is in their best interest, and not someone who is like a fly-by-night operator is trying to sell something because it is cool, right? Or because it is new. They just want to say, well, I mean, particularly more so in housing, because a house is a long-term investment, and they don't want to like take some product and which is going to fail them in a few years and they have no one to go back to. And civil societies, organizations that work for not profit, can activate their networks, can build these partnerships so that the end users are able to build this trust with the product or service that is given to them. So that's just the ways, which was my second takeaway. The third one I want to talk about is, we saw all the things that could be done. I want to say that those are not things that are theoretically possible. These are things that we do, and these are just we have examples for each and every one of them, how to do it, how we have done it, and how it has worked out. I mean, with moderate success in some cases, and really good success in other cases. We just need to be like, cognizant to say that, yes, not everything works, and not everything works in all contexts. So people should take whatever is said with, will it work for me, right? And have that skepticism about whatever is being laid out to them. So Habitat, as was said, is a not-for-profit global organization working on housing, and we work on a model which we call as a 3-house strategy. The first house is purely philanthropic, working with the communities, and helping support by building homes, and all these activities build trust. The second is sort of working on a more market-based approach with them, and this is where the bulk of where the work I have been involved in and most of what I spoke about tends to fall. Though we do get a lot of help from the philanthropic arm of Habitat for a lot of our work. So here we run a Shelter Tech, which is an accelerator program. We have a micro build fund, which is a low cost capital provider for housing microfinance companies, which has also provided first loss default guarantees and others, and grants for technical assistance, so that the housing finance companies don't just have the money and they are able to actually work well. We have a venture fund called the Shelter Venture Fund, through which we make impact investments, and we also provide a lot of grant capital, and we work with a lot of our partners who are our donors, who are other corporates, to and foundations and others, to provide pilot opportunities, others for the startup. The third is the working with governments and others to create this impact and to amplify the voice, and be this drumbeat for many of these problems. A lot of research and advocacy work goes. The recent work we did was on COVID, and how it's called the Way Forward Coalition, how governments and large donors together can work with housing as a way to jumpstart the economy while also solving the housing crisis. And so as I said, right, we have had examples of non-profits. Government is a very good source to solve all this, and if you can get government as a customer, that's a great way to create a lot of impact. But working with the government has a lot of problem, particularly for a small enterprise, right, small and medium business or a startup. So we have had examples where non-profits have worked as a government liaison in the sewage sector. And this other example is this is during COVID, where we had provided pilots, and we have had many foundations that took it on themselves to install modular healthcare units, which is a very interesting and a good product. They, instead of waiting for the government or others, it was the foundations who took this step to support a startup with an innovative idea for these COVID units. And the others are like building trust through working with self-help groups. So this is a startup that provides a roofing product that is more, it's sustainable, it has a long life, and it it's unlike the others. You can use the roof space. Actually, you can use that as a floor also and build another floor on top of that. So, but people have not seen this. It's a new product and people do not want to play around with their roofs and have issues. This one is also provides a lot of thermal comfort, and it doesn't have sound, and lots of good stuff. But just building that trust with the people requires a lot of work. And we have examples of working with local women self-help groups who just vouch for this product and share the concerns of the people which the startup has been able to work with. And we have also worked with other organizations which provide funding for these roofing loans for these products. So just some examples of how civil society has successfully engaged with startups towards this. I do have a lot of examples, so I think we just have a short time frame. So I better stop here and see that, if we do have time, I could give us some more examples, but I better stop here. Over to you, Parna.
I think we have time.
Okay, so that's good. So going back to these examples of supporting new products. While the example of the roofing and working with the self-help groups is one way that has clearly worked, and that's a model we are replicating. What we have seen is, and others are working with local nonprofits to say that, look, one example is installing tap water solutions as opposed to like having hand pumps and other solutions. And the idea here is convince the nonprofits that doing this as a tap in the home has way more benefit than the pumps, which have their set of issues. So we have been able to work with others who were willing to do a small pilot and show this and prove how it works better. And and then the nonprofit, because they work on various other sanitation issues like importance of hand washings and others with COVID, have been able to say that take tap water, this has all these benefits, it's not very expensive, and all these issues have been sorted. So it does this building this trust and making that sale and understanding the local issues and how do you price the product, because it may be tempting sometimes to price it quite low, but that may leave the startup in a very unsustainable position. But sort of pricing it too high may just, or pricing it in such a way that the initial cost is high and then the ongoing cost is more and all that. So this is where the civil society and people who are working in that region and understand the concerns and issues can provide support to the startups, and through that to the impact investors who are able to fill in these gaps and find some solutions that may be a bit more workable. And what we have seen is, in a way, COVID has been a great game changer for some of these things, because the outreach through many other ways were sort of cut off, and people were looking for new and different solutions, and a little bit of risk appetite was there when it comes to some of these solutions, and building this trust. And there was a bit of money flowing into some sectors like water sanitation and healthcare, and many of them did require housing and space as a solution. And those were opportunities that people sort of brought to us, and this is where it also helps to work with organizations that are not just in your sector, but with others as well, so organizations who do work, say in livelihoods, could benefit looking at space and other solutions, because many of these are somewhat interconnected, and many of these do require working with some finance providers, right? Like microfinance or other financial solutions provided. So many of these are somewhat interconnected, and pulling everyone's trust in the region they work in can help promote some of these ideas, of course with doing one's due diligence, and right, not just promoting things that are questionable, and that's where this work of research and multiple eyes asking these questions are quite helpful. So yeah, so that's just some of our experiences working with civil societies in helping some of our impact investments do well, and in supporting other impact investments through our work as well. So thank you.
Thank you so much for that very informative session, Ms. Meera Shiva. Thank you for explaining what is impact investing and setting the tone of the summit. And thank you so much for sharing those examples as well. I'm sure our viewers would have found this session very useful. Thank you once again for joining us.
Thank you. And thank you for this opportunity.
So, if you could, thank you. Next, we have with us Ms. Phi Van Nguyen. Ms. Phi Van is the chairwoman of Vietnam Angel Network. Her experience spans over 20 years as a senior executive in brand retail and franchise development across global emerging markets in Asia, Middle East, Africa, and Eastern Europe. She has engaged in various national projects in developing the creative economy and entrepreneurship network for various governments. She is currently an advisor to Project 844 under the Ministry of Science and Technology of Vietnam on startup and innovation, a board member of the ASEAN Business Angel Network, chairwoman of Vietnam Angel Network, and she is an angel investor with a portfolio of 24 companies. Thank you so much for joining us today, Ms. Phi Van. Over to you for your session, Unlocking Impact in Developing Economies.
Thank you a lot, Aparna, and hello, everyone. I've been very fortunate to have been invited to speak. This time is the second time on this forum, and I wish that everyone would find this a great networking event to do a lot of impactful businesses together. From a perspective of someone who's been doing a lot of investment in terms of into impact businesses, both from the government point of view as well as from supporting NGOs point of view, and as someone who is an investor, I have to say that first of all, I think that there are a lot of talk about impact investment, but I guess a lot of people have different ideas and definitions about impact. A lot of the startups that I talk to will think that if I could do something for 30 farmers in my community, it is an impact. Some people say, okay, I'm going to help an ethnic community group in my country, and that is an impact. I speak to a family office in Singapore, and the guy was asking me, Sophie, what do you mean by impact? Is that helping, the word, helping the people, helping the civilization, helping the earth, and it is a much bigger purpose of what is meant to be an impact. So with that in mind, I think the first thing we need to talk about when we are investors, institutions, governments, NGOs, startups, when we're in the same room, I think we need to understand and agree with each other what impact really means, because otherwise it's very difficult for us to pinpoint what is impact and what is impact investment. So that's my first point of view about impact businesses. Secondly, I find that throughout my years of investing, there is a reality like this. There are two different camps in the startup world. There is the impact camp, which would be the social entrepreneurs. People are out there to do good things for the world. And then there is the not so impactful or not so good guys in the room who are basically startups that are very much commercially driven. And so when you go to a an event or you go to a program, a startup program, you will see that, okay, in this particular corner, there are people who are social entrepreneurs and all they think about is doing the good things for the earth and the good things for the community, but none of them know how. And so they're all seeking funding from governments, they're all seeking funding from NGOs. And if the funding ends, they don't know what to do next. Basically, they are not tasked and they are not provided with the tools and the capacity to actually scale their impact businesses. Impact really to them is, I have a great idea about helping a community, and so I'm going to do something like this. And if I am out here to do this good thing for the community and an impactful with an impactful idea, then someone needs to fund me, and someone needs to continue to fund me until this particular purpose is achieved. On the other hand, the other camp, they basically are very practical. They are very business driven. They have great capacity to think about how to make a startup work and how to scale their businesses throughout the different phases of their startup, and obviously how to exit as well, how to M&A, how to IPO, blah, blah, blah. But then you ask them, so how are you going to help people with this particular solution? Is a question that maybe a lot of the startup founders will go wondering, okay, let's think about something that could add one slide into the pitch deck to say that I'm actually doing something impactful to the community and the world. So these are two special camps in any, I guarantee you, any startup or innovation events that you will come across in any developing markets. Even to date, when I speak to a lot of NGOs and governments, I always say that, you know, we have to erase the camps. We have to bring them together, because the impact camp needs capacity, needs to understand management, needs to understand how to scale the businesses, need to understand how to not ask for funding anymore, and can be very self-sustainable. And then the commercial camps need to learn to have a heart first, need to learn to create impact first before they can actually think about profitability. So that's the reality as it is. The way forward for me, and this is what I've been doing for Vietnam Angel Network, for the ASEAN Business Angel Alliance, as well as for the new fund that I'm putting together at the moment. To me, there are no startups that are in the camp of impact or no impact. The first condition for me to select any startups to invest into is having a good purpose, having a purpose to impact their country, their region, and to the earth and to the world. That is something that needs to be the first criteria. I'm not asking about business models or profitability or, you know, technology in the first place. My first question is always, how is that going to help people? How is that going to help the earth? How is that going to help the environment? And the purpose goes first. And secondly would be the people, because a purpose, you can write it pretty well and put it on a nice slide and make it look beautiful. But at the end of the day, it is only words and presentations that you are delivering. To me, impact has to come from people. And if I am to invest into a business that I know have a good purpose, then I would ask whether the founders are people who are behind impact, or are they just doing it just because it's going to impress the investors. You're going to ask a lot of questions about people, going to ask a lot of questions about, you know, whether if something is not working, and you have to change your business course and you can't make an impact anymore, are you going to sacrifice it, for the money that you're going to make. We ask pretty tough questions to the founders about their consistency and their persistence in pursuing the purpose that they have shown us in the first place. And last but not least, then we will ask about the plan, which is then the business model, then the technology, then the how of the team putting things together to actually scale that idea, scale that business to make it to achieve the purpose that they have set out in the first place. So that is what we are doing at the moment as we speak. So we used to have impact fund and normal fund. We don't have that anymore. We actually only have one fund, and it is impact fund. We don't even say it's an impact fund anymore because we have to make it so normal that if you are investing, then obviously it has to create impact to the community and to the world and to the people of this world. It is not a choice. To me, impact investment is not a choice anymore. Impact investment is the purpose, and if you are in this together to drive impact forward, to invest into startup communities, to invest into entrepreneurs, so that we have a better life, all of us. Then obviously we don't have to talk about impact investment anymore, because it obviously has to create impact. If not, it's not even worth talking about. And that is our philosophy for investment moving forward. So that is what we are doing, and that is what we are pursuing. And that is what I would like to share with you guys. And I actually co-invest with a lot of different funds in Asia, not only in Vietnam, but in Malaysia, in Singapore, Indonesia. And when I co-invest as an LP, I run my own fund, but I'm also an LP for a lot of different funds in the region. And when I choose a fund to be an LP at, I always look at whether they are investing into startups that are making an impact to the world. And that is my first criteria as well as an LP. So I guess if you have a lot of people like that doing things together and making an impact together as investors, then obviously you will be able to unlock the potential of impact businesses and impact investment in developing markets. Mind you that the reality is still there. Mind you that there are still two camps. Mind you that the impact business or social entrepreneurs are still very much at the stage where they think that they need funding, that they need to have a good purpose, and then someone needs to fund them to do good for the future without them even being able to scale the businesses themselves. So with that, I would like to end my presentation, and I wish that every business that we will come across now into the future would be an impact business. And I wish that, all founders will get together, have the capacity to scale, be sustainable, and doing good at the same time. Thank you so much.
Thank you so much, Ms. Phi Van, for that powerful and impactful session, I should say. Last session, you had touched on one all our hearts, and I'm sure this time too, our viewers would have loved the session, and startups and entrepreneurs would rethink what they are doing and what they are really supposed to do. Thank you once again for joining us today and giving us this wonderful session.
Thank you, everyone.
Sustainable impact investing. What's stopping you? To speak about this topic, we have Mr. Guillaume Huet joining from Hong Kong. Mr. Huet is a Head of Partnership and Growth, GAAIVCN. He has over 15 years of experience in banking, insurance, and consulting in operational efficiency and data science in Europe, Asia, Africa. As Head of Growth and Partnership at GAAIVCN, he has an extensive network and access to expertise in the field of sustainable investing. Over to you, Mr. Guillaume Huet. Hope I pronounced your name right, for your session on sustainable impact investing. What's stopping you?
Thank you. All good. Can you hear me well?
Yes, perfectly.
Perfect. Well, thanks for the invite, and thank you, Ms. Nguyen, for this delightful presentation. Well, many commonalities here, and let me directly jump into the topic. I'm coming more on an investor point of view, but also with a large experience in working with entrepreneurs in impact investing, but also out of impact investing. So I come with both perspectives. So hopefully you can see my screen now.
Yes, we can see.
All right, perfect. So first thing first, I like to just clarify a bit. Impact investing is accelerating massively on the trend. Is simply very dynamic worldwide, and the ongoing, I would say, growing awareness. And I should stress this because our main activity is to educate executives on sustainability, but also on the challenges of the climate change, biodiversity loss, and so on. And with growing awareness from the wider population, but also investor on this topic, the money is kind of pouring in the space. So we've seen massive investment on I would say, bond size of investment, with obviously green bond taking the first space, but also social and sustainability, and then sustainability linked bonds. But also we've seen some nuances depending on locations on the region of the different impact investment between the emerging markets and developed markets, where impact investing is also taking place, with different types of assets contributing to this investment. Either private equity often takes the lion's share, but venture capitals also. But we can see private debt, particularly in emerging markets, from family offices and from groups of investors, to be wider than on other markets. So I like to give a bit of this perspective, this nuances there, and this is something that is slightly fading with time. But this is something to have in mind when you are looking for financing for your investment, for your impact investing project. Another point that I'd like to dig into is the nuances between the ESG and impact investing. I mean, it's an important nuance, because sometimes I get this question like, okay, what's the difference? Or it's okay, wait, this project is doing ESG. No, it's important to clarify. I will simplify a bit, but the ESG approach is looking at profitable commercial activity and making sure that its core activity doesn't impact too much negatively its environment, and ideally bring some positive externalities. But the core focus is to stay profitable for many ESG companies. Impact investing, the objective is opposite. The main target is impact investing. And in parallel to this, but it's also one of the expectations, it has to be profitable, and it has to be at least bringing some return to the investors, while delivering as a primary focus some benefits that are measurable. And this brings nuances at the origination, the deployment of the project, the way it's managed, and the exit. Generally, for an ESG, you might be selling the stocks or selling your participations, but it's more, I would say, it's more based on often on capital market based approach. On impact investing here, you might have some consideration on, I would say, it might be more investor to investors, on the focus will be on the impact that this project will be delivering than purely the financial return. The expectation will be different. It doesn't mean that impact investing doesn't bring a return on investment. It's quite the opposite, in fact. But the level of scrutiny, on the level of focus on the, I would say, the impact itself of the project on the environment, the social aspect, and the governance would be much higher. So that's an important nuance to bring there. I'm going to add here a bit of a panorama on the impact investing ecosystem. Generally, on impact investing side, you'll have the demand side, which is composed of the social enterprise, for-profit social mission, non-profit charities, micro-entrepreneurs, who are coming up with a project. On the other side, you have on the supply side, as I mentioned, with the different types of assets, the institutional investors, charities, philanthropies, foundations. It's relatively wide, but with a strong concentration on, as I mentioned previously, on the private equity side, family offices, banks, funds, and so on. There's also a large ecosystem of participants who are contributing to facilitating or advising the success of the company. It could be commercial banks, different networks, industry associations, financial advisory, fund managers, and so on. All of these participants have different expectations on different benefits from this impact investing project. And knowing who is doing what and what are the expectations, the stakeholder management is very important to, I would say, to crystallize the success of the project itself. So beside it, worldwide, there's a galaxy, and I think there's over 150 or 200 organizations worldwide that can support impact investing. And here is just a snapshot of some big names, but it's important to have in mind that depending on your location, different organization will be in capacity to support you, and depending on your country, you may have a different level of support. It doesn't mean that a fund investing from Germany will be only doing it from Germany. It's just the localization of the investor. But I know, for example, that FMO has been investing in projects in Mongolia for the production of renewable energy. And you may have projects funded by an impact investing organization in Australia that could be financing projects in Africa. So it's just the proximity of these different institutions there. So that's something to have in mind if you want to, I would say, to make the best, bring the best of chances to your project as an investor. I mean, as a project for impact investing, but beside, as an investor, to know what is the ecosystem around you. Another very important point in impact investing is risk management, because the objective is obviously to provide the right benefits in terms of environment, social contribution, but beside to mitigate any uncontrolled risk, because the objective is to get something, and I think that Ms. Nguyen alluded to this. You will need the project to be viable on the medium long term, particularly to be able to self-sustain itself at some point. So the business model has to be sound, and this is the main thing to look at. How is the revenue going to be flowing at some point? How do you secure it? What are the hypotheses that you take? How do you stress this hypothesis? What if scenario, doing some analysis, because the environment can be evolving quickly. What if suddenly there's a change in this and this parameter? And looking at the execution risk and but also the management capacity to deliver the execution. There are other risks to have in mind, on the liquidity and the exit risk, because the project itself will need, if you want to be able to get the return on this initial investment, to have in mind, okay, is there a potential buyer for such a project? How will it be working? There's obviously some country, currency risk, microeconomics risk, and financing risk to have in mind, but to a somewhat lesser extent. Normally, the environment and social and the governance risk should be the least of the preoccupation. Nonetheless, we've seen cases where the impact investing project was purely focusing on the environment side, but not looking at the social side, which could be bringing to situations where unfortunately this aspect has been neglected, and it can bring some risk of mismanagement of employees while having a wonderful impact on the environment, or vice versa. So you see what I mean? You could be mismanaging some aspects and but being virtuous on the other one. And that's important to have in mind also. How are each different dimension being taken care of? Last but not least, I like to give a few hints on this aspect of how do you measure if the impact investing project has been really delivering some positive impact, literally, either on the community, on the environment. You need to assess. You need to find some ways to measure and to assess how this situation has changed between before and after. And for this, you need to kind of devise an impact formula to really see how it could be really, I would say, measurable on how you could be having something that will be non-disputable in terms of results. And that's why it's important to look at the breadth. What is the scope that is being addressed? How deep does a project address this issue? How is it going to be bringing value economically? What will be the contribution? And what are the potential risks that are going with this impact? Taking an example on a microfinance project, here the breadth will be the number of loans, the number of persons who are benefiting from this project. What is the size of the loans? What is the value of the loan? And what is the increase of income that has been delivered thanks to these loans? And finally, what is the risks that goes with this project in terms of, I would say, proportion of the loans that have not been reimbursed and so on. So it's here it's a bit of a simplification. Obviously, each project will have its own indicators. Some of them, in some cases, proxies. But I cannot stress enough the importance for any project to have in mind how they are going to be delivering their value, but also how to keep track of it at the different stage of the project. I hope I wasn't too long, and that if there's any question, don't hesitate. Thank you very much.
Thank you so much, Mr. Huet, for that excellent session. I'm sure our viewers would have found great value from the session. We don't have time to take questions, so we are not taking it now. We will share it with you offline if any questions are there. Thank you for joining us today and enriching us with your experience. Impactful philanthropy, delivering breakthrough solutions for social and environmental issues. Now we have this session by Ms. Jennifer Villoria, who is joining us from the Philippines. Jennifer is the founder and CEO of IISLA Ventures, a venture studio firm focused on directing capital towards regenerative rural development for sustainable prosperity and a more equitable society. Splitting her time between London and Manila, she has a wealth of global experiences in investment banking, global strategic consulting, angel investing, and social entrepreneurship. She is also the treasurer and co-chair of the Global Eco Village Network, a UK-based charity that catalyzes communities for a regenerative world. Over to you, Ms. Jennifer Villoria. Let's listen to her as she talks about impactful philanthropy, delivering breakthrough solutions for social and environmental issues.
Thank you very much, Aparna. Thank you very much. I'm so honored to be here today. Can you hear me? Sorry. Can you hear me?
Yes, perfect.
Okay.
Yes, perfect.
Okay, and you can see my slides, right?
We can see it. You can put in slideshow.
Okay, sorry. Let me just say.
Yeah, that's right.
Okay.
Slideshow.
I'm with tech challenge here. Okay, bear with me one moment. right. Okay. Sorry, everyone.
No problem, no problem.
Okay, share my screen. Okay. Right. Thank you. As I said,
Yes.
Thank you very much for being here. As you can see my slide, I'm so honored to be here today. And thank you so much for this invitation to join you and to share with you the work that my company ISLA and Global Eco Village Network, that a UK charity in Scotland that is the umbrella of many eco villages around the world. Today, I will speak mainly as an impact investor and a conscious entrepreneur, having founded ISLA. Listening to the previous speakers myself, I mean, I agree with a lot, and if not every points that they've raised in this space, as I've been operating as an impact investor for a number of years as well, in a personal capacity, both representing some investors. So, I have co-founded and funded a few social enterprises as an angel investor for impact since 2012 and advised numerous NGOs and large global companies' CSR programs, primarily in the first world or in the global north. Added to this, as my introduction says, I was an investment banker in London and Asia, and I think a child born and raised in a poor remote rural farming community in the Philippines, where there was no running water and electricity and miles away from the nearest urban center via dirt track road. So this background puts me, I believe, in a unique vantage point to truly understand the flow of capital, the role and the impact it does on rural economic development and in solving social and environmental challenges that we face today. So briefly, let me introduce you to who we are. ISLA is a venture studio that embodies holistic values in catalyzing and directing capital to co-create a healthy world where no one is left behind. Our vision is healthy people and planet where there's sustainable and equitable prosperity for all. And our mission is to consciously channel capital to underserved communities to mitigate migration while simultaneously protecting the environment and regenerating the environment while preserving the local culture, because we believe that by enabling everyone to live their dreams and aspirations without leaving their homes and communities, many of our problems right now could be eradicated. So what is ISLA trying to address right now is that big challenge is that we've all talked about this, I think, from previous, all the previous speakers. Access to right capital for small to medium purpose-driven organization that address the needs of underserved communities challenging, thereby limiting their growth, while impact-driven investors have limited access to these opportunities. Why does that happen? We know that the world of capital is like this. This is a very simplified version of the flow of capital. For the top are the sources of capital, and the bottom is where the kind of, this is the flow of capital as I understand it with my background. So at the bottom of that are the purpose-driven, small purpose-driven organization, the micro SMEs of this world, and smallholder farmers. As you can see, the intermediation in between is very lengthy. Thereby, the cost of capital by the time it goes down to these organizations very high. We are talking here about microfinance typically. So really, we really look at microfinance has its role and philanthropy has its role too, particularly here in this organization at the bottom of the chart. And this is where we kind of look at what is the role of philanthropy and what is the role of investment. I mean, I think many of us are truly aware of what the role, you know, what it is. But let me just take you through the kind of the way we see access to capital from the kind of the incubation acceleration or the enterprise model that we see in this world. So we look at when we're developing enterprises, idea, beta testing, proof of concept, pre-growth, growth, and new products and market. Alongside that, there are the different types of capital that they are matched with. Microfinance at the lower ranks of it, particularly at the sector of society that we were talking about, the smallholder farmers and the micro SMEs. Microfinance is their bread and butter. Then there are philanthropists or advocates, as we might call them, the do-gooders, the volunteers to build organizations. Then you come the angel investors, or sometimes we call them friends, families, and fools in the circle that we live in. And then this is where we call the kind of the debt part come in as well, the bigger debt come in, the trade finance, when you've got the proof of concept and you have a structure on years of operations, and you have what this new breed called venture philanthropists that straddle between philanthropy and investment. And you look at the SME bank loans, the impact funds come in, corporate loans, venture capital funds, when the enterprise is on the growth space, and then private equity funds and the mergers and acquisitions, whether that's corporate acquisition, and then you get the stock market loss. So this is what we call the sale and exit, right? And as you can see at the bottom of the slide, this is the size of investments that's needed. Now, how many of these organizations, small NGOs and startups or MSMEs, can truly absorb below, like 500K and above? So this is what we call the missing gap, and I think it's been talked about in the investment list. So this is the missing gap in the continuum flow of capital. Now, how do we address that? At ISLA, we look at the education and capacity building, much like everybody else. We're not different to everybody. But I think our research and capacity building, education capacity building is really geared to those enterprises that operate in the underserved communities. Because what we are looking for is making it accessible and affordable. A lot of the incubators and accelerator programs in the world today are not accessible. They are in urban centers, or if so, they also need certain qualifications from an entrepreneur to be able to go through this incubation periods. What about those entrepreneurs that don't have the qualifications, that don't live in the cities, that do not have the time or resources to pay for, to invest in themselves? And then we've got the ventures and the consultancy and advisory. So we are not necessarily different to venture capital funds that exist, but we use the venture studio approach because we believe that in doing so, we can channel the capital much more effectively to those things, particularly systemic interventions that are needed to unleash the flow of capital for these smaller purpose-driven organizations. So that is how where we are and how we see the world as we live in. So how do we do this? We look at it as we have three core pillars. In the center of that is what we call the conscious capital. We believe that we need to transform the use of our capital. We cannot continue to use our capital in optimizing financial return to the detriment of our people and our environment. So we are anchored on transforming capital and direct them consciously to where it's needed. And anchoring and the direction of that we look at is the health and well-being of people and planet. Now we look at food systems and everything else. So this is a sectoral play on that we look at. And we look at education and capacity building. But the education capacity building that's relevant for our audience, the target audience, the micro SMEs and the small purpose-driven organizations, and look at investing in regenerative communities. And this is my role as a co-chair in Global Eco-Village Network, where we are really looking at catalyzing regenerative communities. It's already an umbrella of thousands of eco-villages around the world that actually are creating almost sovereign villages around the world. So by doing so, we focus truly on people, the development of people, particularly leaders, conscious advocates that truly are giving their time and resources for the greater good. We'll look at investing in nature, because nature is the foundation of everything we do in this world with us. So we can see with the climate change now, what we're going through recently, that we can no longer ignore nature. And for ease of communication, transfer of knowledge, transparency in connectivity, we do need technology. Now, technology is not the answer, it's not the solution, it's just part of the solution. And we see this as this is our the dossier, our world, our ISLA world, as we call it. And our philosophy really is this. I'll leave you with this. Thank you very much for that. I will leave you with this. We believe that if we fund organizations or communities that are actively building sustainable and regenerative systems that are accessible and affordable to all, we can co-create a healthier and more equitable world for future generations. So we need to direct our capital away from organizations that are simply reducing the harm they cause to people and the environment, because we will fail the next generation. Thank you.
Thank you so much, Ms. Jennifer, for sharing your journey as a conscious entrepreneur and an impact investor. Your journey and the journey of ISLA is really inspiring, and thank you for the very impactful session. Thank you for joining us today.
Thank you.
With that, we have come to the end of our first session. Now let's move on to the next set of powerful speakers. Now we have with us Mr. Veli-Pekka Koppola, who is the Chief Sustainability Officer at Fairone. Mr. Veli-Pekka has extensive 25 years of face-to-face teaming experience with customers, collaborators, and partners in over 70 countries. Green fintech and tech-oriented SaaS products are very close to Veli's heart. As an investor in various tech startups and founder in others, he is a true asset for any company looking for innovative and sustainable ways to boost revenue streams and value for end users. Today, Veli holds the position of Chief Sustainability Officer at Fairone, a fintech company that helps environmentally conscious brands and retailers offer products as a service for monthly subscriptions and manages product renewal cycles in a sustainable manner. Go-to-market consultant, keynote speaker, investor, sustainability enthusiast, all the way from Estonia. Let me proudly invite Mr. Veli-Pekka Koppola to speak about impact investing's next frontier, remaking the world. Over to you, Mr. Veli.
Thank you very much, Aparna. This was a very nice introduction. So I feel good about it. So just the first check, you see the slide and you hear my voice, right?
Yes, perfectly. Yes.
Excellent. So a little bit coming from a different angle, and as you said, being an investor in the various companies, being the founder of the others, and seeing pretty much the world from the different angles. Today, I'm going to explain you a little bit what is happening actually in the front of a circular economy. But before going to the circular economy, I would like to say a few words about where we are today. And today we are in so-called linear economy. And let me give you an example before going into the slides. Think about the smartphone. Smartphone, if you buy a smartphone, wherever you are buying it, in the Amazon, or you are buying it in the e-commerce or a retailer, you are buying it, you are using it, and once you don't use it anymore, usually you are leaving it your store or in your table, and you forget it, and then you buy a new one. That's so-called the linear economy. So we are not circulating the product anymore. So that's just a few words about that, and giving a little bit information about the circular economy, and very much the first questions I'm making for the retailers or brands, or even for the local or regional global banks, is that are they really ready for the circular economy? Because the production is the most energy consuming a phase in the product's life cycle, and this can be up to 95%. And whilst talking about the productions, I have a question for you, is that what is the cost of producing the one smartphone? And talking about the cost, I have put it in the form of liters of water. Many people are coming back to me and saying that there is no need to produce a smartphone with the water. There is no water needed. But I guess what? Actually, 82,000 liters of water is needed to produce a smartphone. So let's stay here a little bit. So what does it mean, and where the hell is this 80,000 liters water used? So if you are thinking about the smartphone, this is a 200-gram weight of smartphone. First of all, to start to produce it, we need a lot of components. So the components usually coming from the Latin America or South Africa, etc., they are going to be mined there, and when they are going to be mined, then a lot of water is used. For example, for the one smartphone, which is a 200 gram, there is a 280 kilogram of raw materials used for that. So massive amount of, let's say, a CO2 contribution used for that. There are two, I would say, enormous, massive contribution happening today in the world of linear economy to moving to the circular economy. And the first one is really the consumer behavior. If we are looking in the past and going to 10 years, 20 years, 30 years, so it was very usual way just to buy the products and own the products and then store it. And I still have probably a 15, 20 mobile phones in my own home. And I always thought that I will give them out for somebody, or I will give them for my kids, or I will sell them, but still they are just laying around here. And if we are looking about the Z generation, X generation, millennials, the new generation people, how they are buying, they buying behavior is very different compared to 10, 20 years ago. So we are calling it like a responsible buying. They want to buy, they are buying experiences over the ownership, so over the buying, owning, and storing cycle. And they are very well aware about the so-called green aspects. So they know that what it means that if something is recycled, they know that if they are getting a package, that if there is a lot of plastic bubbles around it. So that is the first shift what is happening. It's coming from the consumer behavior. And we have made quite a massive consumer surveys over thousands and thousands of users about that. So it's currently increasing all the time. So what is another massive shift for this happening? Then brands are getting aware about this shift. And when I'm talking about the brands, you can think about the, gardening products, bicycles, consumer electronics, etc. Brands are now seeing that the people want to actually to buy a used products. Let me give an example. This call I'm just giving you from the south of France with the 40 degrees Celsius and damn hot here, but that's not the topic of the day. But the topic is to say that 22% of the used all the smartphones are used smartphones bought in France. And 80% of the people who are buying actually the smartphone doesn't actually need the smartphone. But this just means that there are millions and millions and tens of millions products which are actually sold today as a secondary products. And now the brands, the original equipment manufacturers, they are seeing this shift, and that they are actually introducing a secondary product lines into their own factories. Meaning that there is not anymore this one production line which is just making the products, and when the product is made, the OEM doesn't see the products anymore. Now they are seeing that, hey, there are products coming back. What kind of role we as a brand could be using? Can we actually take those products back? Can we maybe change the batteries, or can we change the wheels, or can we change anything in any kind of products and then put it back into the market and have it more accessible for the people, especially in these days when the inflation is running high. And not only that, because the OEM is going to make those changes into the products, they can also tend to give additional warranties. And what we are foreseeing is that they are actually going to give the same kind of warranty for the used products what they are going to give, or what they gave for the new products, because they know what kind of components are going to fail, and they are changing those components and putting back. So saying all this, and the company where I'm coming from is a FairOwn. So the FairOwn, we are giving for the brands and for the retailers the tools to create actually this alternative to the linear economy, where not only that we are producing or selling or using, after using, we are actually recycling, we are reusing it. Reusing it meaning that if we are now talking about the smartphone, we are getting back the smartphone. We might change the display, we might change the battery, we might change some other components, but then we are going to put it back on the market. And think about it a moment here. When you are going to put it on the market, now the question is how much water we used to make the product back to the market. How much we are actually extending the life cycle of the product. So each time when the new product is coming, we can start to talk about this, whatever it is then, 50,000, 60,000, 70,000, 80,000 liters of water. And that's a massive impact, ecological and economical impact. And I'm not talking only about to have the second life cycle. There might be a product where there is a third life cycle, fourth life cycle. So depending on the product and how it goes. So brands and the retailers, they are extremely interested in about that. And of course, the underlying investors who are giving actually the money, the banks who are investing and are giving maybe the loans for the end users, they are also very interested in, because they know that they are actually creating this circular economy together with the different parties. So saying that the retailers are there and the brands are there and the banks are there, but this is also very heavily supported and driven by the United Nations Sustainable Development Goals. And when talking about the fair on, there's two goals which are very, very important for us. That's the goal number 9, which is actually to put in place a sustainable industrialization and foster the innovation. Sustainable industrialization, it means that in the first time when we are producing those products, let's do not shoulder some components in the way that we cannot quickly change them when we have to change it. So that is changing. And the goal number 12, which is going then for the consumer side, that we are ensuring that there is a sustainable consumption and the production patterns. Sustainable consumption meaning that there is a responsible buying from the people. And so these goals coming from the United States are very important. So saying this, there's this a massive ecological impact. And now we probably are starting to understand that there is this a shift coming from the mining the raw materials somewhere in the South Africa to mining and used products. Mining and used products meaning that I get the old product back and I'm mining here in my own country, in my own city, and I might even then resell the product here in my own country, own city for somebody else whom I'm going to make happy with the product. So there is a less need for raw materials from the water to the metals. And of course, there is less transportation needed or logistics, because think about it. These raw materials which were taken out from the mines in the South Africa, where does it go? It goes probably into the Asia or North America. And then the people are going to put it together for the silicon and then to put it into the products. And then the products are going to be sent back into the Europe. So there is a massive transportation and logistical impact as well. So, and thinking about what the consumers are saying for that. So at the fair on, we have been doing now this roughly 18 months. And in the 18 months, we have got it over 50,000 consumers. Putting payment volumes for the products over 75 million euros on the market, and 70% of those customers, those 4,000 people we have been making the survey with, they are saying that they wouldn't even have been buying such a product if such a kind of subscription model would not have been in place. And when we made the various questions for them, the green aspects came always, that they wanted to ensure that whenever they are stopping to use their product, it's going to find a secondary life. And that was very important. So putting it shortly, we know that there is retailers and the brands and the banks and the United Nations and the customer love it. So let's make an impactful investment together with the fair on. So whether you are an investor or a retailer or a brand or just a consumer, you can always reach out to the fair on. You can find us of course in the LinkedIn. You can visit our web pages there, and you can see what we are actually doing with the consumers around the globe, etc. And last but not least, as the last week, we won a very big award for the best subscription product in terms of the Green Deck. And I will stop it here, and I'm very happy to answer any questions if there are any questions. So thank you very much.
Thank you so much, Mr. Velipekka. Congratulations on winning the award, as you mentioned now. And thank you for that excellent session on circular economy. I'm sure our viewers might not have thought about the cost of a smartphone in the way you mentioned. And thanks for mentioning the buying habits of the millennials and Gen Zs. We have to consider all this while planning the future of our businesses. Thank you for that thought-provoking session.
Thank you very much, Aparna.
Thank you. Next, we have a session by Mr. Miguel Reynolds Brando. Mr. Miguel is the founder and CEO of Cockbrick Europe. He is an entrepreneur since 1987 and the founder of several companies and NGOs. He is an experienced business strategist, negotiator, business broker, and business mentor. And since 1994, is strategic management advisor for several institutions in Portugal, Brazil, and USA. Author of books and articles in strategic management systems, entrepreneurship, business brokering, and teleworking, and also an international speaker in for that. And also an international speaker in several areas such as sustainability, entrepreneurship, strategic management, venture capital, business brokerage, business citizenship, e-work, and sustainable integration of disabled people. Mr. Miguel Reynolds Brando is an international business broker focusing on SMEs and a startup mentor and a business angel. He is also an inventor and author of 2 patents. Over to you, Mr. Miguel, for your session on Global Community for Impact Investing.
Well, thank you very much for your introduction. I don't know if you are seeing me too green. I'm not green, but the problem is that I don't have a green background, so I don't know how is the quality of the video.
I think it's okay. It's okay.
It's okay. So it's just not my natural color. Well, I don't know if you are sharing my slides or if people have access to my slides, or should I share the slides?
You can share it. You can share it. You have access.
1 second. 1 second. Sorry, this is slow.
No problem.
Well, while we wait, thank you for the invitation. Well, as you well mentioned, I've been an entrepreneur all my life, but since the beginning, I was always very, maybe unconsciously, very conscious about the impact of entrepreneurship, because in reality, entrepreneurship is what makes all of us, human beings all over the world, to create solutions to others. And that's what we need to look for, is the way we create real solutions and not just financial gains. It's a complete difference between economic gains and financial.
Mr. Miguel, are you there? I think there is some network issue. Should we move on with the next speaker? Okay, we'll wait for 2 minutes. Let's see if it's rejoining. Okay, I think he's facing some network issues. Let's move on to the next speaker. A strategic view from the board perspective, ESG and sustainability. Next, we have the session by Kit Long. Hope Mr. Long is here. Kit Long also is not available. Let's move on to the next speaker. Now we have with us the Global Director General, Global Alliance of Angel Investor and Venture Capital Networks, and the founder and CEO of Tacit Growth Strategies, also the impact investment partner of the summit, all the way from Texas. La Juana, I think she is messaging me. She is not ready yet. I am moving on to the next speaker. Hope the next speaker is ready. Are we having the next speaker? Ms. Akoma, are you ready?
Yes, I'm ready.
Yes, we have the session by Akoma Onyemelukwe. I hope I pronounced your name right. Ms. Akoma is the Director, Right Proposals Innovative Nigeria. As a global development expert, nonprofit coach, and proposal writer, she accelerated impact and global development through management of large and complex programs in health, disease-focused HSS and UHC, humanitarian, education, governance, and media sectors, strengthened over 1,000 NGOs and CBOs, and trained over 1,500 NGO leaders, raised and managed over $1 billion in grants, advised governments of low and middle income countries, private sector organizations, INGOs and NGOs on policies, reforms, designed, implemented, and evaluated programs, including development of tools, curriculum, and manuals, and capacity building. Let's listen to Akoma Onyemelukwe as she speaks on the topic, investing in gender inequality with an investment lens. Over to you, Ms. Akoma.
Thank you so much for that excellent introduction. I would like to share my slides now. Thank you. Okay.
I can see your slides, but you can, put in slide share. Yes. No, not yet.
Sorry.
Slide show.
Okay, that's it. I'm not sure I'm able to find it. Okay, don't worry. Okay, yes. So we'll be discussing investing in gender inequality with an investment lens. Thank you for having me. My name is Akoma. Thank you for that elaborate introduction. So looking at gender inequality and understanding the issue around it, it stems clearly from the issues around identifying elements of discrimination, and this discrimination actually brought about perspectives of superiority and leading to unequal behaviors, attitude, and perspectives and perceptions. The reason is, why will this happen and why is this so? And it is so because there's a preference of one gender over another, either male or female, or any other gender that people identify with. People prefer some to another. And gender inequality therefore characterizes unequal access to resources, to money, to opportunities, and also unequal access to benefits of rights and resources and opportunities, and creating that assumption of stereotypical, cultural, and socially defined roles. And this discrimination is practiced in virtually every sector of the world, in every space, both in families, legally, culturally, in business. In all those situations, you find gender inequality happening. So you have norms of interaction, you have socialization. These are elements where we breed gender inequalities. Even in business, and opportunity. This is where we breed them. But it is important to know that women are most affected by gender inequality, and women lag behind in terms of access to formal accounts, to credit, to savings, to general investment opportunities. And this impacts the world globally. You know, every country has a great impact around this gender inequality, especially for women. Women make up about 50% of the population, and you can then quantify the impact of this inequality challenge. So there are stereotypes, and these stereotypes are how societies, you know, expect people to act based on their gender. And then it is fuel, these stereotypes fuel the choice of investment, the choice of investor opportunities that are accessible, that are showcased, that are shown. It also fuels the workplace, positioning, leadership. It fuels businesses, the type of business women do, men do, the type of school, you know, even courses and subjects. So it starts from cradle, many of the times, leadership opportunity, and it leads to different rights and, you know, dignities for women. And instead of us having something that is equitable, that's equal, it leads to differences in terms of how people understand it. So to close the gender inequality gap in business, especially for access to investment capital and impact, investment lens for gender is at the core. It's important that we use the investment lens approach consistently and make it a deliberate step that we use each time we're discussing gender inequality and looking at business and investments. So what will this investments gender lens investing approach mean? And we say that it speaks to achieving gender parity. So it's at the heart of the Sustainable Development Goals. Yes, it speaks to Goal 5, but it actually has a linkage across the 17 goals, and that is big. So across achieving all its targets, that speaks to SDG, gender parity is critical. So in doing this, you integrate gender analysis at every level into the investment analysis and decision making. So from the design stage, from the conceptualization to the design to implementation, and also to your deployment and evaluation, you have gender analysis. You're understanding how this affects gender, both male and female. And it brings us, you know, it brings new dimensions to the nature of the investment. So it helps you to understand how to structure it to ensure that balance happens. And it steps out to ensure financial inclusion, to ensure that women and men and women who are disadvantaged, who are vulnerable, who are marginalized, have financial inclusion, have opportunity to live a dignified life. So it involves a combination of investing in women-owned or women-led businesses, making it a deliberate action that at all times you have this lens going through whatever investment, product, service, offering in value that's happening. And also, it looks as you're investing in organizations that have workplace equity, that promote workplace equity. And workplace equity helps to ensure that there's a spread, there's a balance. So women, men all have that opportunity to be in leadership and also to be in the organization. So we're investing in organizations that offer products and services. I've mentioned that, and that improves the life of women in a sustainable way. So it's not one-off. So you need to think through the process from start to finish, ensuring that it's sustainable over the period. So what's the implication? So the implication for gender investing, lens investing, action spans across financial markets, reaching women and girls in emerging market, giving them opportunity to come into the loop, giving them opportunity to be banked, giving them opportunity to add value. Okay, it creates an opportunity to unlock economic power. So every country, for countries to step out of poverty, this is an approach we should be using. It unlocks economic power and drives market development beyond just philanthropy or any type of philanthropy or charity. So it also ensures that we achieve financial return. So value for money, value creation, financial return, and value for the investment that we've made. And it delivers a quantifiable impact on gender parity. So you're able to measure the progress on gender parity with this. And this is big and important. So it speaks to financial institutions, commercial banks, organizations, and impact investors, both in public and private sector, to shape the offering. So in shaping the offering, you are looking at smallholder farmers, you're looking at women farmers, you're looking at women in business, you're looking at youth and entrepreneur. And in all this, really, every one of us have the power to invest in gender equality. And if we do this, we will definitely ensure that there's gender equality. So when we look at results and outcomes, we said that this, efforts made in gender-lens investing has demonstrated positive outcomes. Like I said, it's working on and bringing in a lot of value in eliminating barriers and challenges that affect gender and helping us achieve the 17 SDGs. This is big and notable. Investments, in the potential of women have high and social economic impact, okay? And because of the spillover into healthcare, education, economic growth, job creation. So women come in and they have children, they bear families, so all these things. And there are lots of analysis that show you that when a woman is empowered, then her health is better off, her decision for health, even for her children, nutrition is better. So all these spin-offs are important and helpful for development, holistic development in nations. So research shows that investing in business that have greater representation, investing in business that have greater representation of women in leadership is a predictor for long-term value creation and better financial participation. And this is also notable. So entrepreneurs who effectively demonstrate their ability to empower women will have greater success in accessing their capital source than those who cannot. So it means that after your investment and you're investing in women, your capital will actually be secured. And that's also, you will also have a lot of turnover over the period. So companies with women in executive management repeatedly outperform companies that have no women in senior roles. There are evidence to this, and these are evidence that you can actually check and use in your organization. This is also important for companies with women on boards. I don't know whether you have any questions. Thank you very much.
Thank you, Akoma, for speaking on that very important topic. It is very important that we invest in gender inequality so that we bring women to the forefront and advance gender equality. I'm sure many of our women entrepreneurs in the Zoom room will agree that a lot is to be done in this area. Thank you for touching on that very important topic. And thank you so much for being ready and being there, even though your session was later in the day. We will not be taking any questions as of now because we have a lot of speakers lined up. We will surely share the questions if there are any to you offline. Thank you so much, Akoma.
Thank you so much.
Now, I think Mr. Miguel has joined. Yes, hope you are ready with the presentation. Over to you, Mr. Miguel.
Well, I'm sorry, I don't know what happened. Technology sometimes fails. And I have to change computer, so I don't have the background. But well, I don't know exactly where you stopped seeing me.
No, we haven't started the presentation. I think we are sharing the presentation for you.
Okay, so I'll start from the beginning. I'll not share the presentation. Yes. I will just talk.
Yes, you were talking. Right.
So it will be easier. I'm sorry for all of you. Well, in reality, as you mentioned, I've been an entrepreneur all my life, and what I always like to do is to solve real problems, not just make money. And I think that there are so many things to be solved all over the world. So you have control of the presentation on your side, right?
Yes.
Good. So so what we are trying to do now is, leveraging from all my experience and network all over the world, is to try to create a global community for people that invest in real impactful initiatives. And I say initiatives because it can be business, can be non-business, but it's always an initiative. And the type of people that we are looking for is a special type of people. We are looking for creative minds. Not only people looking for financial gain, we are looking for people that believe that through collaboration, we can reach much further. And the good thing about network collaboration is that it instills creativity. And it's with creativity that we can solve real problems. The problem is that nowadays, fortunately, there is a big talk about impact investment, which is good, but unfortunately, most of the cases are still a lot of greenwashing, let's say, and not real sustainable projects. And I think that we can do differently, and that's exactly what we are trying to do. So we are selecting a group of dolphins, I call it dolphins, in parallel to sharks. We have been listening to the shark world for the last 20 years, but I think that the dolphins can reach much more. And what we want is to, through investment, because investment is what makes endeavors move on. We are trying to solve critical human needs all over the world at different scales. So there is no limit in the size, obviously upper size, yes, but smaller, it can be small or mid or big initiatives. But essentially, it should be something that really has a clear sustainable impact. You can move on to the next one. And what is this? It's very simple, because a lot of people like to turn sustainability into something very complex, but in reality, it's not. As long as what you do is a clear contribution, not only for the people that you are directly influencing, but all the others that can, even in future generations, we will be doing sustainable investment, or we will be doing real economic development. So come back a little bit. So what we need to look for when we are deciding if this project fits in our criteria or not, is just to ask for questions. And the questions are very simple. Is this initiative a contribution to peace? If yes, fantastic. If neutral, fantastic anyway, we can proceed. But if it is negative, somehow, we should stop immediately. And the same happens, the same rationale we do towards health, ecology, and education. And those are, just very simple and basic questions that anybody can essentially initiate a discussion about, and helps people focusing on what is essential. And the essential is to create initiatives that at least has a positive or neutral impact in one of those four dimensions. If you do this, you are obviously creating real economic value. And I emphasize that the word economy starts by the three letters eco. So in reality, if we go in the true meaning of the word, we'll be always doing sustainable development. You can turn it now, please. So what we are trying to do, is to make this as objective and transparent and accessible as possible. So what is important is that the rules of the game, imagine this as a game in an abstraction, is just human beings collaborating under rules. A very simple game that everybody knows is chess. Chess, although it's very simple because you only have 9 movements in a table of 64 squares, but in reality, the possibilities that you can develop with chess are innumerous, almost infinite. And there is one criteria that I like about chess. As long as you understand the rules of the game, which are very simple, from that point onwards, you can play and there is no possibility for cheating. And this is the most important aspect about a game like chess or checkers. It's impossible to cheat by definition, and you don't need a judge. When you don't need a judge, and when it's impossible to cheat and when it is clear like chess, it means that anyone that observes the same company, for instance, will get to the same information, will get to the same result. And you don't need to be a scientist or an economist or someone special. No, you just need to have common sense and being able to study the object that you are looking for. What is important is to have the criteria, and the criteria that we have to define which investments to invest. The criteria is what is important, because the criteria are the rules of the game. So if we create the criteria like chess, it means that all the participants in the process will understand why we invest in some projects and why we will not invest in others. So we don't need, it can be completely transparent, which is something completely unique if you look at the surroundings. So this is our challenge. You can move now. So, you know, it's a very simple initiative, and I think that life is simple. And what is important to do is that if each one of us try to be the change, you know, it's not my words, but we can really change, and we can engage. Even if we can engage only 100 people, fantastic. Maybe those 100 people will later on involve another 10, and then we have 1,000. And then if they do one again, we go to 100,000, so on and so forth. So that's what we need to do. But what is important is to have a tool. So what we are trying to do here in our impact community is to have a tool with a criteria that is transparent, accessible, and trustful. And everybody. And by the way, chess is, as I said, it's a very simple game. And you know that the horse moves 3 by 2, right? But we can decide in the next game that the horse can move 5, 4, as long as all the players that are playing the game know the rule. It's okay, and we have a different game, but it's still transparent, it's still accessible, and it's still cheating proof. And that's what we want. We want a system that, by definition, it's impossible to be manipulated. It's impossible to be cheated. If we do this, if we achieve this, then we'll be able to attract much more people, and people will see the benefits of their collaboration, and the impact will be positive for sure. I don't know if you want to have questions or let it for later.
Yeah, we are not taking the questions now because we have a lot of speakers lined up. So we'll be sharing with you the questions if they have any. And thank you so much, Mr. Miguel Reynolds Brando, for that very informative session. And thanks for that simple comparison of sustainable investment criteria with the game of chess. And as you said, let us be the change we wish to see in the world, as the quote by Mahatma Gandhi says. It's my favorite quote too. Thank you so much for joining us today and inspiring us with your words.
Thank you very much.
Thank you. And now we have with us the Global Director General, Global Alliance of Angel Investor and Venture Capital Networks, and the founder and CEO of Tacit Growth Strategies, also the Impact Investment Partner of the Summit, all the way from Texas, US, Ms. La Juana Chambers-Lawson, with her session on Future of Impact Measurement. La Juana Chambers-Lawson, known by her friends and colleagues as LJ, has been featured in the Oprah magazine, Entrepreneur, Forbes, Voyage, Dallas, and several other publications. TGS, a global impact investment and PMO firm, is also the preferred authorized training partner of the world's leading association for project management professionals, PMI, and offers a robust portfolio of consulting and training to educators, nonprofit leaders, and other categories of project management professionals throughout the world. La Juana's book, Master Grant Writing, A Project Manager's Guide, is an international bestseller and has been lauded as a comprehensive guide that demonstrates how to build and maintain a successful business. Over to you, Ms. La Juana, for your session, Future of Impact Measurement.
Wow, what an introduction. Thank you so much, Aparna. That's awesome. I am really
Thank
honored and
you.
happy to be here. This is excellent. So today we're going to be talking about the future of impact measurement. Question I have for you all is, have you ever thought about the future of impact measurement? Hello, everyone, and welcome to the Future of Impact Measurement, presented by myself, Lafana Chambers-Lawson, founder and chief executive officer of Tacit Growth Strategies, a global project management office and social impact management consulting firm, as Aparna was saying, that's been seen in the Oprah magazine, Entrepreneur, Forbes, San Antonio Business Journal, and recently Marquis Who's Who in America. My name again is Lafana, and I go by LJ, or just the PMO CEO for short. And I'm so honored and feel so privileged to be here with you all today. Today's presentation is near and dear to me as an impact investor, business lecturer, mentor, and entrepreneur. I frequently deliver presentations on impact investing and venture capital as an industry investor who tends to favor non-traditional investment ventures and as a member of several investment and mentorship networks. For as long as I can remember, I've been working to bridge the funding gap. As an angel, I've invested in a fitness company in Ohio, a biotech company in Michigan, an African-American historical documentary in Virginia, a Caribbean restaurant in Texas, and even a museum and digital archive. As a business founder with roots in starting and growing flourishing for-profit and nonprofit entities, I can share with you my horror stories in dealing with venture capital firms and philanthropic foundations. So we're not going to do that today. Simplified, impact investing refers to the practice of providing capital to yield a positive return on monies invested and generate measurable societal benefits. Impact investments are tools that should improve lives. They have the potential to help us grow economically because of, rather than in spite of, historically, or what we like to say intentionally, marginalized and underrepresented constituencies. Many organizations have come to my company, Tacit Growth Strategies, with awesome enthusiasm around building an impact investing strategy that's grounded in realistic measures, that's intentional, that favors transformation, and that's tactically sound. So there are a range of tools available to individuals and organizations interested in creating a holistic impact approach, which should include things like grant making, technical assistance, investment, thought leadership, and partnerships, but they often find themselves in conflicting interests or creeping further and further away from their organization's stated mission or vision. An effective impact investing strategy is part art and part science. For these reasons, I, the former AP environmental science and biology teacher, has created an impact investing evaluation tool that centers equity, freedom, and self-determination, all attributes and characteristics of impact investment measurement that I believe will be tantamount to the virtue and function of impact investing in the very near future here. For many years, philanthropy and investing have been thought of as separate disciplines, one championing social change while the other champions financial gain. The idea that the two approaches could be integrated into the same deals, in essence, delivering a financial return while doing good, struck most philanthropists and investors as far-fetched. Not anymore. Impact investments are defined as investments made into companies, organizations, and funds with the intention to generate social or environmental impact alongside a financial return. While this definition leaves room for a broad set of investments, two key elements should be present: intentionality and measurement. The investor's intention should include some element of both social impact and financial return. And while there is more consensus on metrics for financial return on investment, an impact investor should also aim to measure the social impact. In essence, all investments make an impact on society, some positive, some negative. And those investments must be held accountable by, if not all, as many stakeholder groups as possible. This impact investing evaluation tool is a crucial first step to measuring the fitness of the investment that has been made. With systems thinking, this tool equips investors and their beneficiaries an opportunity to collectively interrogate 3 frames of their hopeful impact. Here are the 3 frameworks that we have on this tool. Financial returns informed by 3 results and targets that are business growth and job creation, health and wellness, and market conditions. Second framework, which is social returns, informed by 3 results and targets, which are storytelling or reporting, inclusion, and performance monitoring and reporting, and benchmarking, which is informed by 3 results and targets, which include the investment framework and design, production environment, and circumspect accountability. Crafting the right impact investing strategy is an essential building block to create long-term systemic change. But being responsible for that change is a very hard thing to do alone. Often, we think about changing perspectives around impact investing as an external exercise. In other words, convincing our partners, our clients, and our customers of our path forward. But internal education and activation is the true foundation that must first be laid with shared definitions and coalescence to a shared vision. That's why I've created an accompanying dictionary to the impact investing evaluation tool to help clarify meaning and intent for a more robust and evolutionary nomenclature that is culturally responsive and resilient to change. So here's a snapshot of the impact investing evaluation tool's accompanying dictionary. As you can see, once you get access to it, you'll be able to look up all the terms that you see on the impact evaluation tool. Both of these products will soon be made available on my company website at growthistacit.com for you to download. I recommend that you sign up to receive our e-newsletter so that you can receive first access to the impact investing evaluation tool and this accompanying dictionary as soon as they are made available. Again, the website is at growthistacit.com. Measuring impact is a fundamental component of grant writing. So as Aparna was saying, I recently authored an international bestseller, Master Grant Writing, A Project Manager's Guide. I'm going to read to you a testimonial that was shared by Iris Gonzalez. And I think that this testimonial perfectly captures why this book is important to founders, executives, and investors who are really interested in making an impact investment that's sustainable. If you're founding or working with a new nonprofit organization, you know that grant funding can help nonprofits tremendously. How can you start grant writing in a way that guarantees success? Many nonprofits focus on first finding a volunteer or a paid consultant who can write that grant application. However, the author, a project management professional, PMP, who has launched a successful nonprofit and for-profit, explains in an accessible way that you need to start earlier and think about grant submissions from a project management perspective. Lawana Chambers Lawson outlines 5 basic principles in her book. First, don't think of writing a grant as a one-off task. Approach it as if you are managing a project, because you are. Second, is your organization even ready for its first grant submission? What do you need to do first? Third, Have you planned for digital inclusion in your approach? Fourth, collaboration and stakeholder engagement. Yes, you'll need all this to submit a winning grant. Fifth, is your organization's governance in tip-top shape? And why does that matter for grants? As you begin the bewildering process of writing grants, please read this book to help you understand what's needed first for the best outcomes. It'll help your nonprofit organization start off on the right foot with a clear intention to succeed. Now, this book endeavors to disentangle grant writing with real-life examples of what to do, as well as what not to do as it relates to pursuing and writing grants. And you know what's interesting about Master Grant Writing, a Project Manager's Guide, is that at the time that I wrote it, I was actually serving as the president and chair of the board for the Project Management Institute that's here in San Antonio, and the Alamo Project Management Institute. And I was transitioning my way from the Alamo Project Management Institute as president to becoming the president and chair of the board of the San Antonio African American Community Archive and Museum, which is a digital archive and museum here in San Antonio. And so at the time that I was writing the book, I was really kind of going through a process of healing. So I really enjoyed writing the book because it was an opportunity for me to say basically to both of my board of directors that we have been able to be successful pre-COVID, during COVID, because we understand tactically how to approach funding opportunities and how to leverage those opportunities to get more investment into our organizations. Very strategic and thoughtful process. In the real world, effective decision makers actively hedge their bets to increase their likelihood of success. As you can tell, I was reading several gambling books at the time. I was reading it's Hedge Your Bets, I think is the name of the book. It's by Amy, I think her last name is Maureen. And it's one of my favorite books. Pursuing grants is a risky endeavor that usually does not produce gains or rewards that efficiently recover what was invested. A lot of times you're putting up $100,000 worth of talent and time and labor, and you're only probably going to get maybe a $20,000 grant from that, or sometimes even just $5,000. So it's not necessarily the financial return that makes the endeavor worthwhile. It's what you can do to leverage that new partnership. So this book should be read in advance of pursuing grants, no matter the industry or scope of work, in order to gain a more circumspect, inclusive, and technological perspective of what all grant writing entails from a learned professional, an entrepreneur who consults organizations throughout the world to and through success, one project at a time. That's the whole testimonial. Very nice testimonial. So I would say this is that Tacit Growth Strategies is successful today because of impact investing. Investing in other entrepreneurs and businesses has been commonplace here at Tacit Growth Strategies since 2018. In partnership with various angel investors and venture capital networks, TGS has successfully impacted lives on a global scale. Angel investors and venture capitalists are more common than most people would assume. People in our communities need to be empowered to invest in founders and businesses that are deeply rooted in environmental and social impact missions, domestic and abroad. Investors, no matter how big or how small, make all the difference in young startups, as funding can often be the determining factor in an organization's ability to make it past those early stages. I know last year here in San Antonio was a part of an initiative that gave about $1,000 in grants to small minority-owned businesses. And you know, $1,000 is not a lot of money, but it is. And it's very significant. Again, the partnership. I like to tell people, I like to remind a lot of us who are entrepreneurs, we're working, you know, that is people who work at places that have large budgets. that can procure the services and the products of different businesses, you have a lot of power. And, you know, it can be something as simple as having a printing company that is minority owned, or a company that comes in and provides you catering. You know, they cater muffins, or, you know, salted peanuts with tahini, you know, those types of things. Though that contract, even if it's just $500, it matters. It matters to the ecosystem that you're trying to build. And it gives legitimacy to companies who probably don't have much of a reputation yet, because they're just getting started, or they just can't really get a lot of business where you are. So consider, you know, those small portions of work that you can afford to outsource. Consider that. Consider who you're choosing for those opportunities, and remind those companies that they can take your logo, you know, give them your logo and say, hey, you know, when you talk about what you've done for us, you can do that on a newsletter that you might put out, or you have a flyer, or you might want to put it on social media. We're happy to share with the world that we're a partner of yours. Those types of things make incredible differences in a business's trajectory. So consider those small things. Even if the contract that you give them is only, I had a contract with one of my companies, it was only a $700 contract, but she took that $700 contract and she got a government contract with it, because now she had a reference, you know, for the service that she provides. So you have to think about that. Provide professional references to these businesses that you want to support and that you work with. Those professional references, they go a long way. You know, provide a review on Google for that business. Provide a review on Yelp. All these different services. That is how we can make a difference right now. Making a difference does not always require us spending money. Sometimes it just requires us caring. Simply, it's a care. It's an expression of care and consideration. If we want something, we have to invest energy into it. That is why TGS partners with organizations such as Global Council for the Promotion of International Trade and its Global Alliance of Angel Investor and Venture Capital Networks, who aim to grow and scale their effectiveness and support around the world. No matter your niche or sector, engaging angel investor and venture capital networks is essential to scaling impact investing and impact investments globally. Sharing information, sharing those lessons learned, sharing those tools at global summits like this one, the Global Impact Investment Summit 2022, facilitated by the GCPIT, GAAIVCN, and Tacit Growth Strategies, is also vital to the growth, maintenance, and scale of enterprises world over. As founders, we must decipher and control what information is critical to success. We must be willing to share that information with others. After all, a key element of impact investing is knowledge creation, knowledge transfer, and knowledge retention. We encourage and challenge you and your organization to invest in your own ecosystem so that we may all enjoy a more sustainable future. At Tacit Growth Strategies, we are in the business of giving back. Through our partner network, the Women in Business Cluster, Virtual Industry Cluster, promoted by the Global Council for Cluster Excellence and Research and Global Council for the Promotion of International Trade in association with Tacit Growth Strategies, we inspire, encourage, and support organizational champions where we connect and grow specialists irrespective of titles, industries, or geographic locations. Please stay in touch and feel free to book a free consultation with our team anytime on growthistacit.com. Sincerely yours, Tacit Growth Strategies, the entrepreneur's entrepreneur.
Thank you so much, Lahana, for sharing your journey and especially your journey of writing the book and for that very informative session. It was really a thought-provoking question which you asked in the beginning. What is the future of impact investing? And thank you for that very impactful session. Thank you for all the support and also being part of GCPIT. Thank you. And now we have another very powerful speaker joining us all the way from Switzerland, Ms. Shweta Banerjee. Ms. Shweta Banerjee is a TEDx speaker, TV presenter, founder, and managing director of Impact Investing School and Impact Community Camomile, co-founder and president of Galileo International Impact Investing Center, and board member of Swiss Impact Investment Association. She's an impact investing expert and is actively raising awareness and educating various stakeholders about this topic around the world with the main purpose to transform finance into the force for good. Swiss Impact with Banerjees is a weekly show on how impactful investments and businesses are helping to implement the 17 UN SDGs worldwide to preserve the world for future generations. Through this show, the Banerjees have an enlightening and in-depth conversation with news speakers, celebrities, thought leaders, entrepreneurs, project owners, investors, politicians, and business leaders, and encourage them to act now. Over to you, Shweta, for your session, Impact Capital, Finance and Leadership for Sustainable Development.
Hi there. Thanks for your kind introduction. Can you hear me well, just to make
Yes,
sure?
Perfectly. Yes.
Fantastic. Fantastic. Thanks for having me today. It's really my honor to be here and to share our views on impact investing, our practice, what we do. So if you allow me, I will share my presentation just in a second. So, can you see my screen?
Yes, we can see it.
Just a second, I'll make it big so you can see it in full. A second. Yes, can you see it now?
Yes, perfect.
Perfect. So the topic I'm going to talk about today is impact capital, finance and leadership for sustainable development. And today I want to underline leadership, because we need new leaders in impact investing space, and we need to support those who are already creating impact on our planet. Our company is called Impact Investing Solutions, and I will tell you later what exactly are we trying to solve and how. Before that, I want to ask, you don't have to answer, of course, but it's more like a rhetoric questions. The first one is, are we taking the right action? And this question relates to the global sustainable investing assets. If you look right now, how much of assets globally are invested into sustainable businesses, into sustainability, it is around 30 trillion US dollars. However, what you need to check that impact investing and sustainable teamed investing, which are creating more and true impact, are only making a tiny number. So the practices like negative screening are 2/3 of the 30 trillions, right? And also ESG integration, which is so popular. ESG, you hear everywhere. It's also more than 15 trillion US dollars, right? So it's crazy when you look at these numbers, like, what are we really doing and where are we allocating our money? So this is very important to understand in order to take the right action. And if you're just doing simple negative exclusion and screening, how can you shift towards upper scale to impact investing? The second question I want to address is true impact investing versus greenwashing for feeling good. Because when you say, yeah, we are doing sustainable investing, it feels good, we are doing something, but are we really creating impact? So what we say that sustainable investing is needed. We need huge corporations to transform, to create impact, right? But rather solving huge problems, they are staying on the surface, right? They might include policies for having more women in their top management positions, or maybe they reduce waste or have some CO2 practices, so decreasing CO2 emissions. However, the mission is still profit generating, right? So let's be honest. So today I said, okay, I'm just going to say how it is. And impact investing, it creates deep impact. So when we talk about impact investing, when we interview businesses on our TV program, when we work with impact businesses at our school, we only select those who are committed to solve one or several sustainable development goals and create systematic change for our planet. So action for climate change, or they provide accessible education, or they provide accessible health care, trying to take plastic off our oceans, and so on. So really creating impact for our planet in environmental and social aspects. And the third question I wanted to ask, how and can we at all achieve sustainable development goals? And again, some numbers here. So global impact investing market was estimated at $800 billion in 2020. If you look at global wealth by BSG report, we had around 220 trillion US dollars. Okay, so impact investing is making less than 1%, 0.36% from that amount. And I guess some of you and all of you already know that the gap which we need to invest to achieve sustainable development goals annually, this is important, is 2.5 trillion US dollars. So if you look at the numbers, and if we would just increase the market size of impact investing to 1.1%, it is actually 2.5 trillion, right? It's realistic. It's not something like, oh, no, it's really possible. The thing is, are we shifting the capital quick enough and to the right projects? Or is it just still flowing to some companies which are stating that they create impact, and in the reality, they are greenwashing or creating a little bit of impact, but not changing lives, not solving our environmental issues, which are huge, right? Nowadays, you can really not deny climate change. All right, these are the questions to think about. And again, it's 800 times 3.1, you will come to 2.5 trillion, which is possible. So when we check the reality, right? So what is stopping us to achieve sustainable development goals? What are the challenges? What are the issues on the way? I would say that in the practice here in Switzerland, but also around the globe, because we work internationally with India, with Mexico, with Colombia, with Sweden, US, very many countries, Africa as well. And so what we see, that there are actually three main challenges. First is still lack of awareness. Many people don't know about SDGs. Many people don't know what exactly impact investing means. And if they know, right, then they cannot educate themselves because education is very limited. Here in Switzerland, I'm a guest lecturer at many universities on the topic of impact investing, social innovation, but they don't have still like a solid professors in all universities and modules which students can and have to, not only can, but they have to learn about new finance, new world, which is out there. So there is a lack of education. And if there is education, it's too expensive, right? So many people cannot afford the impact investing education. The second challenge is the capital flow to impactful businesses. What we face that many businesses create impact, they might be not aware of it even. So we help them to integrate SDGs properly so they can find and present themselves to impact investors. And also capital flow is not flowing quick enough. So many don't want to take a risk to invest, right? They are still in the old-fashioned thinking of profit creation as first. And I think I'm talking to all financial institutions, banks, we need to change our consciousness, how we actually approach the due diligence process of impactful businesses, because when they have a track record, and you can look at private equity or impact investing funds in different asset classes, they were actually much better during pandemic, right? Or in times of crisis, they are better performing, or also of course in normal times. So there is no trade-off between performance and impact. And this is why capital flow needs to be shifted to impactful businesses, much more efficient, quicker, and a risk-friendly way. So some risk needs to be taken. Because talking from my practice, we were trying to help one of the amazing projects in Africa, and even development financial institutions, which are there to support social and environmental projects, they are still in the same old thinking. They don't provide capital if you don't find another big partner in marketing in the same industry and then impact investor on the side. So they don't want to take the first step and say, okay, you have 50% from us, now find impact investor. No, it's still chicken and egg problem, right? So I really hope that this way will change in the time. And the third big problem, which I also think is valid on our planet, that impact community is kind of not diverse, but if we are spread around, we are trying to create our impacts on the planet, which is amazing, but we need to unite our forces. So the global impact community needs to become more collaborative and stronger, right? Because we don't need the whole population of the planet in order to achieve sustainable development goals. It is actually proved by scientific research that we might need only 5% of the population thinking in our way, that sustainable development goals is important, we need to shift capital and so on, and doing things. And then the whole community of planet Earth will also think in the same way. We will shift the change. It's like revolutions were happening on our planet, and many changes were done by little part of the population. So now, as you know what is a reality and how to deal with that, how do we deal with that at Impact Investing Solutions? With my business partner and partner in life, Ben Banerjee, we have created an ecosystem for support addressing all these issues. The first one is Impact Investing School. So we provide accessible education about how to integrate sustainable development goals from A to Z. We accompany businesses which create impact and help them to get funds. So it's not just education, but when they're ready, we also introduce them to get funds in a very efficient way. The second is Swiss Impact with Banerjee. You mentioned it at the beginning when you were introducing me, so I'm not going to spend too much time. We created a TV show, the unique one, which helps, again, also fundraising part. We discovered it recently. It was more for awareness, but what we discovered that projects or impact funds who came to our program, they either got partners or funds or both, whatever they were looking for. Our audience is very receptive. And this is great to see that people are watching it and acting on the businesses and supporting. The third one is certification. It's called Impact Leader Program. And it's there to support and encourage impact measurement. I will talk a bit more about it on the next slide. And the last is the community. So the rounding up. So everyone who's been in our school, TV show, or is certified is then also part of impact investing community, where you can also interact and find amazing partnerships and investors, experts, whatever you are needing. So a little bit more detail, Impact Investing School. So we call it education for life, right? Because it's really not about education, theoretical one. We teach from the experience how to create successful and meaningful business, how to scale your business if you have already something amazing, right? So we help you to grow and create more impact on our planet and fundraise in impact investing space. And of course, getting others to support, expertise, and mentors along the way. Here are some of our inspired students who were also participating at the competition Impact Leader. You see, he's not there on the picture, but it was also with some investors like Kevin Harrington. You in US must know him precisely well, the original from Shark Tank, right? TV show Shark Tank. So he was one of the juries at our Impact Shark Tank. So we create impact leaders. We empower new leaders which are going to change our planet for a better place for the future generation. I also want to underline that because some investors or financial institutions even don't know that you can do impact investment across all asset classes: cash, fixed income, private equity, hybrid, real assets, and family offices with which we work together. They also transform the whole portfolios with the time, maybe first 5% into impact investing, but then when they see it's working, they create returns and impact. They transform the whole portfolios into impact investing. And the themes are really all SDGs and energy, water, environment, education, health. So whatever is on your heart, you can find it and make impact with your money. Okay, so there is no excuse that you couldn't find your favorite topic. It's really anything you want to create. Our TV show, it's at the moment the only impact TV show with celebrities, but it's tied to sustainable development goals. So we are very strict that everyone who comes must create positive impact. We are by now in 122 countries with 200 million viewership, which is amazing, and broadcasted on 100 smart TV channels and 7 podcasts. So you can even listen to us on Spotify, whatever podcast, Apple's podcasts, and get inspired, find investment projects and various initiatives to get engaged. Here are just few of our speakers, which you can see. There is the president of Mauritius, head of European Investment Bank. We have, here is Kevin Harrington, by the way, and so on. So really a lot of amazing people who are coming. And I also invite anyone who feels like we want to come on our TV show, please contact us. We would be happy to broadcast you as well. So we raise awareness, and that was the original goal, and get funds is now became a side effect. So if you are looking for money or partners, or you want to get outreach in some countries, please contact us. We will help you with that. Certification. So it kind of improves your contribution to 17 SDGs to become an impact leader certified. You also increase your credibility and customers' trust through that, right? If you have our label and brand as an impact leader, so you can easier attract impact investment. But the whole program is there to encourage people to measure impact and not creating 100 pages impact reports. No, because as if, again, talking in the practice, nobody reads them. 100-page impact report, nobody is reading it. Unfortunately, there is so much amazing information, but people are not reading it. We teach how to create impact report, 1-2 pages, that you can use it for your stakeholders. You can show that you are creating impact, and which is helping you and others to get, so that others will take an example from you, right? So we want to transform the systems. And last but not least, Chamomile Impact Community, which unites the ecosystem, which I told investors, projects, experts, and then you can connect, you can chat, you can create events, whatever you want. Check it out. It's free. So you can do a lot of things for free on the platform and find whatever your needs currently are. So last question, what are you waiting for? Let's create positive impact. Let's put our money where our mouth is, right? So be serious, get into action. We are all about action and solutions. thank you very much. It's all from my side. If there is a room for questions, I'm happy to answer any.
Thank you so much, Ms. Shweta Banerjee, for the very inspiring and powerful session. As you rightly asked in the beginning, are we taking the right action is a very thought-provoking question. And thank you for sharing the challenges, lack of awareness, lack of capital flow to impact for businesses, and lack of global impact community. Through GCPIT's Global Alliance of Angel Investor and Venture Capital Networks, we are also putting forward our humble efforts towards solving these challenges. Thank you so much for that powerful session, Shweta. We are now taking the questions now. If we have any questions, we will be sharing it with you. Thank you so much for inspiring us with your session.
Thank you for having me here, and it's amazing initiative to spread the various topics of impact investing around the globe. So congratulations, guys. You're doing an amazing job.
Thank you so much. Next, we have a session focusing on long-term value creation, ESG's role in private equity. This session is going to be presented by Dr. Sandra Guerra, founder and president of Circulars for the Future. With over 20 years of experience in the field of sustainability and 10 years on circular economy, she brings a wealth of knowledge and experience that encompasses public sector, non-governmental, and private sector. International speaker and lecturer, strategic consultant on circular economy, sustainability, and regenerative women businesses, a leader who wears multiple hats and who works with a mission to help social and green entrepreneurs, particularly women-led businesses, to overcome the challenge of being profitable while generating positive impact. All the way from Spain, we have with us Dr. Sandra Guerra, with the session focusing on long-term value creation, ESG's role in private equity. Over to you, Dr. Sandra.
Thank you so much. Good afternoon to everybody. Good morning, good evening. It depends on the part of the world we are addressing. It's a real pleasure to be here, and I'm really appreciative of your words and your leadership in this event. It is also a pleasure to be sharing with such a wonderful speakers that have presided me. This interesting, and maybe we are going to repeat some of the things, because in impact investment, we are all with our heart very much closer to sustainable development goals and so on. So I'm going to share my screen now, if I may. Let's see. I am using another
yes, we can see that.
No, it's not my, yeah, right. Can you see that now? No, no.
Not yet.
Not yet? Okay, let me see. Yeah.
Yes.
Right.
No. Yeah, we can see.
Yep. Well, as you have said, we are going to talk about the long-term value creation. And this is something that has to do also with our previous speakers have mentioned. But we want to start by, of course, there are many statistics and data is immense, and we have different sources of information that all of them are showing in a different way that impact investment is growing significantly, but still not enough. As we have seen in the previous speakers' presentations, still this means a very tiny part of all what is being invested. So actually, we have apparently a huge market still to take advantage of. So the question is, where and how are we going to measure this impact investment? Because, well, the first thing is that everybody talks about impact investment meaning different things. Some are meaning social investment, some are talking about sustainability, associating it to just environmental issues. Some are doing the ESG, but in general terms. And this is why we have seen recently that, for instance, in the European Union, we have had a regulation regarding taxonomy. What does it mean to be sustainable for an enterprise? And this is going to be used for ESG reporting. But ESG, anyhow, even with the diversity and loose way of being interpreted, it has been consolidated as a very useful tool. So we have seen that at least 10% of private equity assets in Europe were allocated to ESG funds by 2020. And it is expected to grow at least almost double at the end of the 2025. So we're positive that this could be the future, but still, as we say, it's not enough, not just because of the quantity, but where are we allocating those funds? And how are we measuring these ESG factors? When we say energy use and carbon footprint, for instance, which is one of the huge sectors that have captured most of the funds, we are maybe meaning reducing, being more effective in energy use, and also using alternative sources. But we need even to go further. What is the cause of the pollution? What is the system? So this is why we have been talking about Sustainable Development Goals as a measure, as a paradigm to aspire to, or a parameter. And I like to use this image, which was produced by the Stockholm Resilience Center, because it shows actually that the main thing in the Sustainable Development Goals is not just the need to consider all of them at the same time as a unit, but also the different interpretation of sustainable development as such, as an aspiration of society. And this is why they have drawn first the biosphere, which serves all the needs and gives us crucial services for our well-being. And then they have drawn society and economy on top of it. And this is crucial because then we know that even if we are investing in something which is in the level of economy, we have to take care of the basis, of the foundation of this economy, which is the biosphere and the society. So we cannot miss all of these aspects in a very light checkbox. So there is a 2.5 trillion annual gap in investment to achieve Sustainable Development Goals. So there is a lot of scope for improvement. But the question is that there are crucial issues like the biodiversity loss. We have registered 30% reduction on biodiversity in the last 20 years. Is this risk or opportunity? It is up to you. ESG is not just about reputation, it's about addressing this kind of issues. And biodiversity loss, for instance, encompasses a lot of opportunities for bioeconomy. So if we regenerate the biodiversity, the ecosystems, we have opportunities to really create great value. And I am mentioning regeneration because this is what we mean about long-term value creation. What this implies is regeneration, because to reduce the negative impact, to reduce pollution, to reduce resource use, this is positive, but it is not enough. And it leaves the situation half solved. we need to regenerate. We need to give back hope. We need to get soils again ready and capable of producing crops. So this is why we are underlying the regeneration part, because we have gone so far in the destruction of our ecosystems that we have to really restore and regenerate them in order for us to be able to create long-term value. And of course, there are some strategies that have been suggested, like PwC says that we should buy dirt and sell clean, buy clean and outperform, identify early and take this to scale, benefit from structural shifts. And this is all fine. This is true. These are good strategies, but we have to go deeper. We have to ingrain regenerative principles in the whole process, in the whole strategy of impact investment with a systemic view. Circular economy is one of these regenerative approach that goes beyond recycling, because people always associate circular economy with recycling, but it is much more than that. And it's much more than the 3 R's that are so popular: reduce, reuse, and recycle. So as we have seen in this image, we have use, reuse, redistribution, remanufacturing, repurposing, upcycling, etc. So the question in impact investment now is to innovate in companies or allocate in the companies that embrace circular production processes and operations, because it is essential actually to transform the process, the production process, and the consumption, of course, also. But this is what we can address with impact investment. And the criteria have to start with big and small companies, entrepreneurs and consolidated ones, improving the life of the margins. We have to see who are the vulnerable people who are not making it, and not only investing in what is short-term return, which has a good short-term return, but also to address those small companies or those small groups which are needing, excruciating for funds, because the return is the peace of your community, the prosperity of your community, and this is the one who is going to contribute also to a peaceful and prosperous society. So the question is, with circular economy is not just at the enterprise level, it is also at the city level, at the governance level. It involves many dimensions, and there are also opportunities to support a lot of enterprises which are emerging to serve the purpose of dynamic awareness and also social change to support the activity of the enterprises. I think that there are many examples. I have been involved with huge projects like IRODI, which is given a new dimension to the bioeconomy, cross-sectorial innovative research that it started with the food industry, and it involves a lot of companies to create new value from something which was considered a waste. But also we have small entrepreneurs that have embraced these principles of regeneration, and they have realized that to produce a chocolate, they could have gone backwards to what is the source of their production, the opportunities to explore those opportunities and take advantage of them in all the waste that was all these resources that were being wasted. So we have also seen in Colombia or Ecuador, many of these integrative approaches of circular economy, as well as in Europe or elsewhere. And they are really giving not only returns in terms of course, the financial investment returns, but also they are activating talent, creativity. They are activating the communities, as have been the case of Bucarete, this company in Colombia, who has just been the winner of the Circular Economy Prize and in the Green Prizes in Iberoamerica. So, well, this is time for systemic change, and I am looking forward to support those who would like to consistently create strategies for ESG, upskilling the team, and making a difference. Thank you so much.
Thank you so much, Dr. Sandra Guerra, for that, for another very powerful and inspiring session. As you mentioned, the impact investing is growing significantly, but still is not enough. So if all the speakers keep repeating the same topic, I think still it won't be enough. Right? Thank you so much once again for joining us today, and looking forward to working with you in the future as well.
Thank you.
Next, we have the session Social Inclusion with Impact Investing by Dr. Shantana Robinson. Dr. Shantana is the CEO and Chief Business Strategist, Business Architect, Outreach Diva, Procurement Queen, and Diversity Inclusion Whiz for MFAD Creative Group US, LLC USA. With over 23 years of retail and business management experience, she empowers businesses by offering impactful knowledge-based information to assist them with reaching capacity. Whether it is the creation of a business plan, bid meeting prep and procurement, SWOT analysis, or market research, she has your business capacity covered. Over to you, Dr. Shantana Robinson, for your session on social inclusion with impact investing.
Good morning, everybody, and thank you so much for that beautiful introduction. My name is Dr. Shantana Robinson. As it was just mentioned, I am bringing you greetings from fabulous San Antonio, Texas, located in the United States, coming to you live from the She Shed. You can't see it, but trust me, I'm here. We are experiencing some serious heat. I'm pretty sure it's attached to global warming, just like everybody else. So I hope that you all are staying cool. It's about 10 o'clock in the morning here. So for those of you all who are stateside, good morning. For all of my fabulous brothers and sisters from all of the other places of the world, good morning, good evening, good afternoon, and good night to some of you. But thank you all so much for joining us. I am going to share my screen so that you can see my fabulous presentation. Give me 2 seconds to get that in order for you. And from the beginning. All right. So I am here, as it was just mentioned, to talk to you all about social inclusion with impact investing, which is a fabulous topic when we talk about small business ownership. As it was just noted, I have been a small business owner for over 20 years, and I have had a serious impact in the economy simply by working with what are known as SWIMBs stateside, or small minority women, veteran, LGBTQ enterprises as a whole. So today, I want to share some really cool statistics as well as information with you all so that you can possibly utilize it in your day-to-day transactions, whether you're a business owner, working for somebody else, or if you're just looking to make a great impact in your community as a whole. So a little bit about me. As I mentioned, I'm a business owner. I'm a go-getter. I consider myself a shero. I'm also a college professor. Most people don't know that. I also consider myself a business strategist as well as an intersectionality whiz. That's what my doctorate was actually tied to, all revolving around the wonderful world of business. And that is me with my cheesy smile that you see facing you right now. So once this is actually over, hopefully you will have a better understanding of how to be impactful via social inclusion, holding yourself accountable for your actions on a global scale. And that includes you as well as the company that you work for or the company that you're founding. And then also realize that your business and just everyday life is fluid. So in other words, what may work for somebody else may not necessarily work for you and yours. So everybody's journey is different, but there are pieces of the puzzle that we all can actually utilize to work together for the greater good. So let's talk a little bit about what social inclusion actually is, just so that everybody has a good understanding. So by definition, and there's oodles of them that are out there, but the one that I found that kind of hits home the best is the one that you see in front of you. So social inclusion is the process of improving the terms on which individuals and groups take part in society. You're able to actually have an improvability when it comes to like working, your overall environment, social interactions are better, opportunities are put forward for you. And then the dignity of those that are disadvantaged on the basis of their identity is actually improved as well, because you are now including those individuals in your decision making and your processes. When social inclusion is done correctly, overall, you'll see an improvement in the production and workflow of your industry, as well as a reduction in overhead of the people that may be leaving your company. So in other words, retainment, right, is significantly kept in place. And you also have a higher retention rate overall, and your employee happiness is great. I used to tell people when I worked physically in a store, one of the things that I did on a monthly basis was have an actual team birthday event once a month. Sounds cheesy, right? But something as simple as serving cake and ice cream and getting everybody together to talk about what's happening for the month, to celebrate the birthdays for the month, and give them their kudos did not cost our company much at all, but the impact, right, that little gesture had on the employees was great. So employee happiness is extremely important. And then, of course, you have better employment opportunities overall as far as the outcomes go. So here are some interesting stats that you all might be aware of, or that may be new to some of you all. Stat number one, the United States is leading the world when we talk about VC, venture capital investing, right? White males are 30% of the country's population, yet they're nearly 80% of venture capitalists that are actually investing in actual companies. They're also 80 to 90% of leadership in venture-backed companies, right? So the big question that comes from that little stat is, where do what are known as SWIMBYs fall in line? For me, it has been a situation where socially, we've been able to be very impactful by targeting those specific businesses that are in alignment with us. So your small, minority, female-led, veteran-owned businesses, because we have literally walked a lot of the same paths that they have, right? So we're able to actually expose them to things that can get them to capacity, which is one of my favorite words. And you can probably see my name badge actually says Dr. Bridge Builder. Point number two. Women are about 56% of the US philanthropic foundation CEOs. Great number. But people of color only occupy 11% of said roles, despite a significant philanthropic emphasis on serving communities of color in the United States. So that's another interesting statistic. So in other words, even though you have a large percentage of populations that will fall up under what are known as minority-driven communities, the actual CEOs and decision makers and people that are at the table may not necessarily reflect the actual individuals that they are attempting to impact. And when you have situations like that, you have a situation where those communities are served to a degree, but it's more along the lines of checking off a box and not actually getting embedded into the community that they're looking to do that outreach to have that social impact on an ongoing basis. Organizations with an above average gender and ethnic diversity on their management teams had innovation revenue that was on average 19% higher than companies with below average diversity leadership. So that ties into what I just mentioned with point number two. When you have a management team or C-suite and decision makers that actually are a direct reflection of the community that you are actually trying to be grounded in, the overall statistics has proven that that company will pay more into and be more impactful with the community that they're looking to serve, right? Because they are better able to actually speak to the nuances that that community may be going through because they are tied to it in numerous ways. So when we talk about corporations being impactful, what does that look like? Because as a small business owner, in my particular case, it's like when you hear social impact and, venture capital investing, you're thinking millions of dollars. Well, as a small business owner, I can't afford that, right? You're trying to figure out how can you be impactful on your own? What are some things that you can possibly do? So here are some ideas. So driving capacity building needs of SWIMBY. So in other words, you are honing in on the communities that you belong to and that you serve. You're listening to their concerns, finding out how you can actually work with them, potential partnerships. Maybe there's a business owner that's just getting started in your community, and the quickest way for you to be impactful for them is to share about them on social media, right? So that other people in the community find out about them and want to be impactful. On a larger scale, maybe it's a nonprofit that's already established and you become an arm part of that nonprofit. Here in San Antonio, I love to work with the San Antonio Food Bank. I literally put out what I call an APB with some of my favorite friends, and we all show up at the San Antonio Food Bank and we are impactful in the community that way. I have also sold into other communities by simply writing out a check, right, to help them with a project that they're working on, or allocating my time. Back in the day, they used to call it time and talent. And I like to tell individuals that you definitely want to make sure that you do both, because they're very important. Number 2 on my list is committing funding. So that actually ties into what I just mentioned. Not necessarily a large amount of funds. It can be whatever your business or your capabilities are actually in alignment with. With MFAD Creative Group, which is the name of my company, on a yearly basis around our anniversary, which is August the 6th, in case you're curious, we like to actually do a small business scholarship for a student that's actually in the School of Business. So that is our commitment to funding that we do on an annual basis to a student that is in financial need, revolving around the School of Business that is looking to further their education. Something as small as that can actually go a long way. Diversity on your boards. Now, here in San Antonio, they do what's called the board game, which is quite well known and done on a regular basis, where they invite individuals from all backgrounds to do a version of a class. They hold numerous sessions, and you find out where you would actually fit as far as matchmaking goes. Because you may be surprised, as I like to tell folks, everything is not for everybody, right? So every board may not necessarily be in alignment with what your cause or mission is. So you want to make sure that you do your research. And then if you find a board that you're interested in, do a little more research on that specific board and find out what opportunities they're going to have revolving around new board members. So diversifying boards and C-suites is extremely important. We have to have those conversations. We have to realize how to network, right, to change our net worth, right? So LinkedIn is your friend. I always like to tell my students that on an ongoing basis. So when you're on LinkedIn, make sure that you're linking up with individuals that might be part of these corporations and businesses that you're looking to actually build those relationships with, so that you can be impactful, rubbing elbows with those individuals, finding out about the different things that they have coming down the pipeline, letting them know that you're genuinely interested in the actual community that they're serving and you would like to build a bridge with them. And then last on this list is supporting research and pivoting with the times. So many times I run into individuals who are on the financial side of the house. In most cases, they are Caucasian, they are male, they're 65 plus. So what worked for them when they originally got into the market 40 or in some cases 50 years ago is not going to be where we're at now in 2022. When you look around and look at startups or look around and look at the tech industry, you will see that we have evolved and changed greatly. Our C-suites and our boards should reflect that as well. When we talk about supporting like change programs over in different parts of Africa revolving around water and electrical alignment, there are small businesses that are backed and ran by individuals that would love that opportunity to get involved in that support. So connecting those dots is so important. And this is where the research component plays a huge factor, and pivoting with the times, making sure that you're adjusting to where we currently are, because technology is great, but it's also scary for some individuals, right? So we have to make sure that we're in alignment with where we currently are. And for those of us that are not in alignment, that we're helping them along the way so that we can be impactful for social inclusion in the grand scheme of things. Here are some companies that you all might be a little bit familiar with, but according to the latest report, quite a few of the ones that you see in front of you have gotten it right, whether it be on a grand scale or on a smaller scale, right? Ben and Jerry's, I'm very familiar with them. A lot of people are probably very familiar with Google, use them on a regular basis. Adidas is another great one as well. So these companies either have landed on a list for employee satisfaction and landed on the list for social impactfulness. So meaning that not only do they actually have a great product that people utilize on a regular basis, they're actually sowing seeds into different communities on a regular basis. They are paying their individuals living wages. They are sowing back into where their actual company is located at, whether it be access to actual structural framework, access to scholarships, access to benefits, as strange as it sounds, for their workers. That's great. So make sure you check them out. And some of them are what's known as we call it in the United States, forever brands, right? So these are those wonderful brands that have been around forever. A good one that's on here is Coca-Cola. Coca-Cola has been around, let's just say, for a long time. And the product itself has evolved. But one thing that Coca-Cola has been known for that has nothing to do with the actual consumption of drinks, right, is their social impactfulness all over the globe. So definitely research some of these companies and see what they're doing and find out how you can possibly be in alignment with them on a smaller scale. Something as simple as finding a startup that you might have heard about, getting with that person who's thinking about starting up this business. And maybe it's like me, a food truck, right, with the student. And they're like, I think this is a great idea. I want to roll with it, but I'm not even for sure where to start. Having that conversation with them and giving them the nuances of this is what you need to do, A, B, C, and D, to possibly get you started. A founder's circle, right? Investing in that startup because you see the vision. So you may not have $250,000 that you can hand over to somebody to be, a large venture capitalist, but guess what? You might have 500, you might have 1,000 to invest in their business, and think about it as a perspective of you help them lay the foundation for their start and see where that goes in the long run, because it can be extremely impactful. When we talk about examples of social inclusion, all of the ones that you have listed here are great ones. Internet for All is a huge one here in San Antonio, where large corporations have fed into the concept of Internet for All, going into those communities where they lack internet access and actually being able to give them the tools and the opportunities to have internet for their fabulous students in the community, as well as adults, right? Because if you don't have internet, how can you apply for a job? How can you complete your homework? It's important for you to have that reach. Participating in education and training programs, participating in employment programs where you're doing outreach services. All of these things that are listed on here are great examples of social inclusions, building that pipeline, sewing into individuals in high school, still in universities, being able to have that conversation with them about what does it look like when we talk about funds. These are all great examples of social inclusion through actual investment impact. Simple things that we can all do. Here are some great resources that I utilize for some of the information that I shared with you all. Yes, the websites look long, but definitely make sure you take a screenshot, right, of the ones that I have listed in case you want to check out some of the other things that you can do on a smaller scale as an individual or with maybe a group of your friends, or if you're a small business owner, potentially rolling this into the opportunities of a small business owner to show your other arm, right? So not only are we about making a profit, but we're also about being socially impactful and sewing into communities that need it. So definitely check those links out as well. I am Dr. Shantana Robinson. It was a pleasure being with you all this morning. I hope that some of the golden nuggets that I shared with you all were insightful and beneficial to you all. Definitely make sure that you connect with me on LinkedIn and on my website as well. I look forward to all of the wonderful connections and the conversation that will ensue from today and tomorrow and Saturday's activities. Take care, everybody. Thanks once again.
Wow, what an energetic session, Dr. Shantana Robinson, to end day one of the Global Impact Investment Summit 2022. You have set the tone right for our day 2, where we have another set of very powerful speakers with their powerful sessions. Thank you so much for joining us today and setting us on fire with this powerful session. Wow, what a day that was. Powerful speakers with powerful sessions. But this is just a beginning. We have 2 more days to go, as Dr. Shantana rightly said, and we have a lot to learn about impact investing. Hope you got a chance to listen to all the sessions, because this is a topic you would not want to miss. And we hope you will start implementing whatever you have learned today. We at GCPIT are doing our part in whatever and whichever ways we can to save our planet. Hope you will do too. A sincere gratitude to our chief guest and all our powerful speakers who joined us today and enlightened us with their knowledge. Thank you to our impact investment partner, Tacit Growth Strategies LLC, for their unconditional support in the summit. And a big thank you to all our viewers who have joined us on all our social media platforms to listen to these powerful sessions. Thank you, dear friends, dear council members, and thank you each and every one of you for the support which made this event possible. That's all for today. Join us tomorrow, same time. Till then, this is Aparna G. Kumar signing off. Take care. Bye-bye. Have a good day, good evening, or good night. See you all tomorrow. Bye-bye.